Okay, I think I'm live. There we go. There's the brightness. I think I'm live. Let's get some confirmation that I am live here. I see the timer going. Just waiting for YouTube to tell me. Okay. Doesn't want to send me an email, but I see the timer going. So I believe I'm live. Let me scroll to the bottom of the chat and see if anyone's confirming that. No. All right. I'll assume that I'm live. Yeah, the timer's going. So there it is. I'm now live. Good. Let's begin. I see that some people have front-end loaded 20 questions, and I'm not going to answer 20 questions for one person. You'll have to. I'll answer a few, but you'll have to weave them in so that I can get to everyone here. Lam Weston, I'm new at exiting positions via selling calls. If I had to do one at the price. At the price, what's the price? How do I do better than just selling the 100 shares I own? Well, if you don't want to own the stock, you don't own the stock. Just don't own it. If you want to do better than where you are, there'll always be risk in selling a call. Let's say you sell, where's Lam Weston, a little under $60 at this point. Let's say you sell a 57.50 call, it could drop to 55. If you sell a 55 call, it could drop to 54. If you sell a 52.50 call, it could drop to 51. There's no guarantee. The only guarantee you have that you're out is selling your 100 shares. Selling calls is a way to lower your average price over time if you're comfortable holding the underlying. If you're not comfortable holding the underlying, just get out. I'm comfortable holding the underlying. I think it's been massively overdone. And I'm seeing last week, I think there were two upgrades. No, there was one upgrade to overweight and then one upgrade to a hold from buy to a hold last week. So I'm comfortable with it. If you're not, then don't play the game. Just exit. CPI comes in hot. How much damage will it cause FCX and Oxy? I don't know. It depends on what the number is. It could cause no damage. It could cause a little damage. It could cause a lot of damage. It could go up. This is the market. All you can do is just be aware of risk events, and then you would say to yourself, what will I do if the price goes up? What will I do if the price goes down? That's all. That's really all you can do. Am I comfortable with the price going down, and what will I do? That's all. Excuse me. I've been holding live sessions all week long, and my voice is pretty much done. Hang on. I will try to get through as long as I can, but I may not make it. I've been drinking hot tea all weekend, trying to get my throat to relax. Fed announced plans to conduct Treasury buybacks over the next 2 years. Do you think this will offset the effects of the yen carry trade? How do you believe it will impact inflation? I don't think it'll have any effect on inflation. There we go. The buybacks are to increase liquidity. It's not buying back stock to decrease the amount of outstanding debt. It's to increase liquidity. So I think it's a neutral. You issue and then you buy back. You issue and you buy back. You issue more and then you buy back some. I don't see that it's going to be a player in anything. AI capex is skyrocketing quarter by quarter. Google and Microsoft earnings are only rising by 15%. Sends mixed signals. Either earnings aren't increasing due to insufficient infrastructure, or high capex aren't translating into earnings. Well, whose AI is working? really. I mean, whose AI is working? Have you ever used a chatbot? They have no idea. They have no idea what you're doing. Voice translation doesn't work if you have an accent. I haven't seen a good AI yet. It's full of, it's an impressive move forward. Excuse me, it's an impressive move forward, but it's certainly not ready for prime time. It's certainly not anything you would deploy out in the field. It's been a nice move forward, but where it needs to be is miles away. I think we're several years out from it being something that has the promise of what we think it has today. Much like the internet, when the internet first showed up, there was a lot of a lot of rush into the space, but not a good understanding of, well, how are we going to use this? Where's the business model here? So it was a rush for eyeballs. Right now, it's hang on. Yeah, I might not make it 3 hours tonight. Right now, it's a rush for data, and building models as fast as you can. And the output of these models so far has been, not that great at all. I've played around with a few models, and I think when I get out, I think, well, I can't trust the output. So I mean, I'd have to fact check everything that the model does. So I think it's going to be, you have the investment first, and then the payoff happens years later. The same thing happened with the move to PCs. We thought that, getting rid of the typewriter, getting rid of the typing pool, and moving to the PC is going to massively increase productivity. But it was at least a decade before earnings started showing the return on that investment. And the question throughout the 80s was almost, even in midway through the 90s, was, where's the return on the investment? Because this stuff was depreciating as fast as you were investing in it. So by the time you got some return, the equipment you had was obsolete, and you're putting money into the next round of equipment. And that's the thing with technology. You have these models now, but in 2 years, you're probably going to have even better models, which means all the models that you have now are going to be worthless. I think that's going to be Tesla's problem, is all of the data that they have in getting that car to drive itself is going to be worth less and less and less the more other cars are communicating with you, the more the lights are communicating with you, the more the streets are communicating with you, the more everybody's cell phone is communicating with you. At that point, the car doesn't have to figure out that there are 7 cars ahead of it. The 7 cars ahead of it will tell the car, hey, I'm ahead of you. Right? So you don't need that model anymore. You don't need GPUs. You just need compute. You just need CPUs. So I think in time, a lot of this investment now probably won't have ROI for years to come. Last week you said you don't worry about cash if all your puts are exercised. Is this because of risk management or having enough cash? Both. What percentage of your portfolio is in stocks, cash? I don't know. I don't calculate that on a daily basis. I wouldn't know. I wouldn't know. I'd have to actually make a point of calculating it. I recall PPI can sometimes indicate potential movements in CPI. Could the expected market movement caused by CPI next Wednesday, this Wednesday, not next Thursday, this Wednesday, occur in advance of Tuesday, triggered by PPI? PPI is Tuesday, CPI is Wednesday. Oh, the market could react to PPI depending on what it says. The market may ignore PPI. The market may celebrate PPI. Who knows? I know that some of you out there might be saying, this guy doesn't know anything. Nobody knows the future. Nobody knows the future. So if I told you that CPI was going to come in as expected, what's the market going to do? I don't know. If CPI came in lower than expected, what's the market going to do? All we can say is most likely it would find that good news. And if the CPI came in hotter than expected, most likely the market would find that bad news. But what's it gonna do? I don't know. I mean, I've seen the market rally on what otherwise would be bad news, and you're left trying to figure out what the hell happened there. I've seen the market sell off on what would otherwise be good news, and you're left wondering, well, what the hell happened there? And I've seen the market not react to what I thought would be, well, that's a news to react to. And so what's the market going to do? I don't know. I don't know any of it. But I do know what I'll do if the market goes up, and I do know what I'll do if the market goes down. That's all I can control. That's all anybody can control. If somebody tells you they know what the market's going to do tomorrow, that's just making it up. They're just nobody knows, because it's not that the future is hard to predict. The future is unknowable. There is no future until it actually happens. I am when I do this, I'm blocking my mic, so when I trying to clear my throat here to speak a little more, you don't get the big sound of it. Oh, hang on. Look at this down here. Let me check this. I can actually mute my microphone. Look at this. Maybe I'll get through the 3 hours after all. Is the time value of an option the same at Friday's close and Monday's open? Yep. If not, why is the weekend counted as days? The weekends are counted as days. The theta of an option comes out sometime Friday afternoon, Friday around noon, going into the afternoon. The theta comes out for the weekend. Or do you keep cash for margin requirements? T-bills or just pure cash? Mostly T-bills. I mean, why hold pure cash? I can do better with T-bills. But sometimes you have a cash balance. It's sometimes isn't worth it to go buy T-bills for 60,000 or 50,000, but mostly T-bills. Sell out the money puts expiring on August 16th with a strike of 50. The stock closes at 55 but drops to 40 after the market closes. Due to earnings announcement. Can the put holder still exercise the option at the new price, or is the option still worthless since the market is closed? So you're talking about on expiration date on August 16th. At 4 o'clock, that's the end of the game. At 4 o'clock, that's the end of the game. I have never seen a company report earnings Friday after the close. I've seen companies release news Friday after the close when it's bad news. They'll release it Friday after the close because they want the market to have the weekend to think about it. So they'll do it after the close on Friday. But at 4 o'clock, that's the end of it. On any other day, the short side has till 8 o'clock that night to issue assignment. If GM buys 10% of the outstanding shares, how would you estimate the price? Well, if they buy 10%, figure out what the new share count is, take their current market cap and divide it by the share count. So if they have a market cap of 50 billion and they buy back 10% and they get the share count to 1 billion, that would be 50 a share. You just take the current market cap and divide it by what you think the new share count will be. Can you sell covered call without increasing the margin requirement? Yep. Let's say, for example, you got FCX at 51, but right now the price is 41. How would you sell calls towards this if you still want to hold the stock in the long run? Just sell 10 delta calls. There is always the possibility that it rallies and it gets called away from you. If it rallies and gets called away from you, then just turn around and sell puts. It's gone. Go ahead and sell a put. You don't have to make money the same way you lose money. You can still play the game. You're still in the game. Just go ahead and sell a put. But rallying from a 50 delta to 10 delta, I think that would be tough to do. Calls and puts. How can I ensure a cash settlement instead of incurring fees when closing the option at expiration? You can't. You can't ensure a cash settlement. There is no option to say, can I just get settled in cash? You can't. When financing a call by selling a put, how are taxes? I don't know. I don't know what country you're in. So I don't know what your what your marginal tax rate. I don't know what country you're in. I don't know what proportion of income you make from the market. I don't know how your tax authority classifies you. I can't answer that question. I know nothing. I know nothing about you. Are weekly job reports a good estimate for monthly unemployment? Can we sum weekly reports to predict monthly unemployment? No. Initial jobless claims are just people getting unemployment. So you can have 300,000 people this week that filed initial jobless claims, but 350,000 people got jobs. So it doesn't tell you what the unemployment rate will be. So not really. No, you couldn't just add them up. If you don't have cash in your IB account, does IB liquidate T-bills or treasuries before options? A T-bill is cash. A T-bill is a cash equivalent. So if you need cash and you have T-bills, what IB will do is create a negative position secured by your T-bill, which means you'll be short, let's say, whatever amount of money you need, but it won't liquidate the treasuries to meet a cash requirement. It'll say, well, you have treasuries. Well, that will act as collateral. It will not make the assumption that you want the treasury sold. Then you would have to sell the treasuries to cover your short cash position. All right, let's skip down to something more here. To what extent carry trade could impact equities? Not a clue. Could that become a problem and lead to a financial crisis? Not a clue. That would require me to speculate on how much of the carry trade went into equities. I have no idea. I think that would be a silly bet to have two levels of risk on your carry trade, the currency and the equity market at the same time. But I would have to speculate about, how much of the yen carry trade went into equities. I don't have an answer for that. I don't know. I don't know. You mentioned you use Koifin, but was wondering, can you talk a bit about what service providers you subscribe to? None. I subscribe to none. You can get everything you want for free. Everything you want is free. You want anything from a company, it's free. Just go to their website, investor relations, sign up for email notifications, you'll get it. Every economic data report is free. Everything from the Federal Reserve or your central bank is free. Everything from your treasury is free. All that data is free. If you need specialized data, like let's say, and if you need advanced charting capability, most of the time your broker will provide you with most of that. You should be able to get most of that with your broker. If you need specialized data for, let's say, an industry or something, well, then you're going to have to look at the industry groups in that particular industry, and they may have a data subscription that you can subscribe to that would give you more granular data about your particular industry. But for the most part, I don't subscribe to anything because I can get it all for free. Any of the decent enough information I can get for free. How does the stock price drop after dividends are paid? It just drops. Who sells the shares? Nobody. When a stock goes ex-dividend, money is leaving the company. So let's say a $50 stock and it's paying 50 cents a share. That means 50 cents a share of cash is leaving the company. So its market cap drops by the sum of 50 cents times all of those shares, because money is now leaving the company. The company is worth that much less. So it just reflects the fact that a dividend is paid and the price just opens up lower by the amount of the dividend. Can you look at volatility skew on Koifin? I don't know. I can do that on IB. So I don't know. I'm sure you've answered that, but when you refer to a risk reversal, you're referring to buying a call and paying for it by selling a put. Correct. Cap rate, a 5 to 10 year investment. Why did you say you would sell it in the 50s? It depends on how it gets to the 50s, right? I mean, if it gets there in 2 weeks, it's a little too quickly. But if it builds there over time, then sure, I'll sell it. Sure, I'll keep it. I have way too many shares. Number one, I bought way too many shares. So when I say that I would sell in the 50s, is I would try to get back to a core position because I have way too many shares. That doesn't mean that I wouldn't buy it more on pullbacks or use the options in exchange of the underlying. I plan to stay in Cap REIT for years and years. But at 62, I'm down to 62,800 shares. It's a kind of a little much in one stock. It's a little much. But at $43, it was like, I don't understand why this is $43. I just kept buying more, just more out of anger and frustration that it was still $43. But in once we get to mid 50s, like 52, 53, I would think that I would be lightening up my position. Its book value is 55. I think it should be trading maybe at 55, maybe slightly above 55, but I don't think would be trading at 65, right? It is still a REIT. It still is going to be priced in relation to what its book value is. And I think the market is going to be skeptical about its fair value valuation. It is an IFRS company. It doesn't use depreciation. It uses fair value adjustments. So there's volatility on the income statement because of that. There were fair value losses and now there are fair value gains. I think the market will be skeptical about that for a while. So you sort of have to anticipate how the market is going to react to this as well. So yeah, I would lighten up in the 50s, and if it pulled back, I would add to it. And if it went up, I would lighten up. And if it pulled back, I would add to it. How do you decide when to make a directional trade versus an income trade? It depends. For a directional trade, I can always do it with options. I would rather, like for GM, I would rather, with interest rates really high, synthetics are really expensive. So for that, you'd rather own it only because the interest rate is so high that the synthetic would be expensive. So I'd rather just own it. Why do you do puts instead of doing a risk reversal, a call spread? I don't want to do a call spread. I don't like spreads. I don't like these multi-leg trades on day one that are on the same side. I don't like it. I don't know. It depends on how I feel. There is a benefit to owning shares. Let's say that I want 10,000 shares of something and I have 5,000 shares. I can still sell puts, and because I have 5,000 shares, I can sell 10 delta calls if I think that the volatility for the underlying is going to be low for a while. For the most part, I do quite well with the options. I do better than if I just bought the underlying and went away. Some I do very well on, and others, if I sell a call, sometimes I've had the situation where the stock rose and it was called away, and I was like, oh, maybe I shouldn't have done that. But for the times that I shouldn't have done that, all the times that I did do it and I should have done it were great. So type 1 errors are, doing something you shouldn't do. Type 2 errors are not doing something you should have done. If I don't sell the calls, I would end up making more type 2 errors than type 1 errors. So I'm okay selling calls, knowing that every now and then I'm going to be wrong and it will be called away from me. But the number of times where it works far outweighs the number of times it's called away. So I have to look at the capital I deploy to get that done and what the return on that capital is. It's quite good. And it's not as much work as what you would think it is. I mean, selling a call takes you 30 seconds and then you're good for a month or 40 days or however long you sell the call for. You simply wait. It depends on what I want to do. Right now, I think the market, like let's say that we had a 25% pullback on the S&P over a period of 2 quarters. And the Fed has lowered interest rates. The economic data was bad. It looks like we had a recession and the market's starting to find its footing again and starting to go up. At that point, you want to lean into beta and you want to lean into delta as much as you can. So if I did sell puts, they would be in the money puts. They'd be in the money puts. I wouldn't mess around with out of the money puts. But when I think that valuations are a little bit high, it's safer for me to sell out of the money puts. What I'm basically doing is saying, I like this stock. I just don't like this price. But I would be a buyer if it went to this price. So sell a put. Sell a put. And it generates a stream of income by doing that if you have a number of stocks that you wouldn't mind owning. But once I'm an owner, I'm okay with it. I own GM. I own Freeport. I own Capri REIT. I own Minto. I'm long a whole bunch of shares, and I'm okay with that. Wouldn't you want more delta if you have high conviction? Yeah, and I do. New positions in the market outlook, not for easy tips, but to learn how you take decisions, manage risk, especially doing unexpected situations. Please continue to emphasize this aspect of the market outlook and share as much as you can. Well, that ends in 2 weeks, the new positions, right? That will simply go to the applied level. This is just sort of giving you an idea of what it looks like. XLU, do you think that after this business cycle ends, utilities will perform better than usual? I think once the asset build is done, they'll perform but I think they'll do well for whatever asset build out we have. If you believe in a digital future, meaning that you believe in an AI future, you believe in a robotics future, you believe in a self-driving future, you believe in a robotaxi future, you believe in a 5G future, you must believe in copper because those are all electrons, right? You got to move. If you believe in a digital future, you have to move electrons around. That's where the power comes from. You have to move electrons unless you're using carbon-based fuels to get that done. I don't think so. You got to move electrons around. If you got to build a whole bunch of houses take a lot of copper. A lot of copper in the plumbing, a lot of copper in the wiring, a lot of copper. So if you believe in that future, you must believe in copper. And if you look at the supply available for that future, the mines don't exist today to supply that future. We have enough copper today. We have enough copper for the next year. But if that future starts unfolding faster, there is not enough copper. There's not enough copper. That will be the limiting factor here is copper. Much like the limiting factor for data centers right now is energy. NextEra's earnings were great, and what they pointed to was the huge rise in data centers for that big boost in earnings. A data center will take 75 megawatts, 100 megawatts to run one data center. Usually a big solar farm is you can measure that in megawatts as well. Every wind turbine is 1.5 megawatts. So you would need a wind farm of 50 turbines just to power one data center. All of that's electricity. You need all of that is moving electrons around. You need copper. So, yeah, I think utilities will do well for a while. You got to build out getting back to the utilities. The infrastructure isn't there either. So you're going to have to build more infrastructure if you're going to move the fleet of vehicles from the gas station to the utility. You got to increase the capacity of the grid. It has to. If you're going to have all of this AI, you got to increase the capacity of the grid. It has to double, if not triple, in the next 10 years. If you believe in that kind of future, yeah, you got to get that grid up. If you think, yeah, we're all going to have robots in the house, they all got to recharge, they all have batteries, they all have copper, they all require a utility to recharge, you're going to pay for it. And so the asset build out has to happen. Construction and engineering industry's current record revenues and backlogs not dwindling yet. Where do you think we are in the cycle? I don't know that we are in any one phase of the cycle. I think what you have is you have to look at where we are in the cycle by each sector. Some sectors like automotive are in a clear slowdown. Some sectors like housing, we know, have been in recession for a while. Manufacturing has been in a recession. We're also getting slow. Restaurants are in slowdown, if not in contraction at this point in time. So I think at this point, it's more useful to think about it sector by sector. Where is this sector in the business cycle? Until you have a broad-based collapse in the economy, then I don't know that we can say that we are in a contraction. We're, it depends on where your sector is. Is it worth buying now? Barron Focus Growth Fund. I don't know what that is. So focused growth. Well, it's growth. That means you're betting on growth. I'm more of a value player. With value and good options, I can create growth-like returns consistently with very low risk, nice high Sharpe ratios. Isn't that the name of the game? Not to produce the highest return, but to produce the highest risk-adjusted return. And if you can produce high risk-adjusted returns, bring leverage to it, and you can have a growth portfolio with value stocks, with nice big cap value stocks where you can sleep at night because you don't mind owning them. That doesn't mean I never bought growth stocks before. I have. But it's almost momentum trading is that, these growth stocks end up getting priced for such perfection that if they miss earnings by a penny, it's destruction. So every earnings call, you almost want to be out of the stock for earnings because there's such huge volatility events that when momentum breaks, it breaks. It's not coming back. Those days are behind me. I like my style as it is right now. Lack of any fiscal responsibility being exerted regarding sovereign debt. Do the Fed keep an eye on maturing debt and the need to refinance? Well, no, that's the Treasury. I don't think the Fed's really looking at that yet. But I think the Fed is wary that unless fiscal responsibility begins to show up, it's going to make their job very difficult. And sort of a conundrum is that maybe rates need to go up, but if rates go up, we'll crush the economy with the level of interest expense. The debt will just keep increasing and increasing. And at some point, the Fed will have to buy it and expand their balance sheet. So I think they're wary of the path, of the fiscal path right now. But I don't know that anybody's there with their finger on the trigger to do anything about it now. What do you think about the Hindenburg research report? Well, you say the report. I'm not sure which one you're focused on. They are too focused on Indian top family. Yeah, I'm not sure when you say the. They have many reports. When you say the, I'm not sure which one you're talking about. My heart is really broken after seeing how Hindus are killed. How Hindus are killed Bangladesh. Hindus are killing Bangladeshi, or Hindus are killed by Bangladesh after the coup? Is it human religion? Is it human nature or religion at its peak? Well, it's human nature to believe in religion and to believe in these things because it gives people meaning. We're seeing people since thousands of years yet killing like animals. That I think is human nature. That I think is human nature. There is, I hear people bashing capitalism sometimes, that capitalism is the source of evil. No, it's human nature. It's human nature. Regardless of what system you have, no matter what system you have, there will be greed, there will be poverty, there will be suffering, there will be rape, there will be murder, there will be racism, there will be hate. There will be all the evils of the world would still exist. It would just be different people doing it, and different impacts, but it would still happen. This idea that if we go to socialism, we'll all be everybody's brother and everybody's keeper. No, there'll still be murder. There'll still be theft. There'll still be greed. There'll just be different people doing it. Different people will have the opportunity to do it. It's human nature. It's just human nature. Here, I think we could be helped out a little bit with a little bit of philosophy from Nietzsche. He used an example of lambs and eagles, or hawks, and the lamb does not believe the hawk is evil because the hawk kills the lamb. There is no conception of evil. It's simply just the nature of the hawk. I don't know why there's this, or I mean, I'm speaking like him now. That why is there this layering on of evil when it comes to human nature? It's what humans do. It's what humans have always done. It's what humans will continue to do. When we look at the history of the world, I think what you'll find is two constants, two truths. Every nation on this planet, every nation is built on the bones of some other defeated nation. Every single nation. It's not just Europeans that did this. Every single nation in the world is built on the bones of some other defeated nation. And every border on this planet, every border is drawn in blood. It's human nature. It's also human nature to be good, right? It's not that we're all evil, and we wouldn't even use the word evil. Would use probably the words good and bad. It's not as if everyone is on one side of the spectrum. There is a distribution of human nature, and you have people that are like that. There's nothing you can do about it. It's what it is. Trying to say, hey, we should all get along is, I think, like pissing in the wind. I think it's rather useless. I don't know if you think that's a rather negative point of view, but look, killing is as old as the hills, right? Murder is as old as the hills. Theft, robbery, fraud, as old as the hills. So, and it's been in every society, in every social structure and every economic structure that has ever existed. At some point, we have to say it's not the system, it's the people. Way back historically, if you were bad for a society, you were shunned. You weren't killed or imprisoned. you were just shunned. You had to leave the society and go off on your own, which was basically a death sentence because you needed the protection of the village. But if you did something wrong, off you go, get lost. We don't need you in our society. Here we keep people in our societies. Bad people, we keep them in our societies. So there will always be that group. You never actually get rid of them, right? Maybe there should be a place where we send everyone, like Greenland. Maybe we should buy Greenland and send everyone to Greenland. What else do we have here? Record contracts awarded by the government and utilities to advisory firms in recent quarters. What are your thoughts on the sustainability of this trend over the next 5-10 years? I don't know. I don't know enough about that. How do you decide how many positions to maintain in your portfolio at any given moment? I don't know if I make a decision. I think last week with what I was doing, I think I had over 150 line items. So that becomes a little unmanageable. You got to look at the 150 line items and you can say, okay, well, what if this turns really bad on me? So you look at your portfolio statistics. It can calculate expected shortfall. You look at dollar delta beta. You can manage that at a portfolio level, but 150 line items starts to get challenging. So you rank them from highest embedded profit to lowest, and then you start making decisions about, well, what do I think about this one? What do I think about that? And you try to say, well, let me reduce it 10% today. And you look for line items that you say, yeah, okay, my conviction on this isn't there. Let me get rid of that. And you slowly, pare it down over time. When markets go up, my line items drop. When markets go down, my line items increase. I buy on the way down, I sell on the way up. Sometimes I buy too soon, sometimes I sell too early, but overall, I think I do all right. You said you write covered calls on Capri or 12 cents. Is this your high conviction call? Wouldn't you lose your share? Well, it's doubtful that it would get there. Cap REIT is not a big mover. It's not high volatility. And as a REIT gets closer to its net asset value, it slows down. So it can, if you look at a chart, it can increase, but as it gets closer to its net asset value, it starts to do this. It starts to get choppy. So if its net asset value is $55, you don't mind selling calls at 55 because you'd be selling at net asset value, right? And then if it's called away from you, you can sell a put at 55 to buy it, lower. It depends also on what account they're in, right? The selling that I would do first would be in my RSP and my TFSA because there is no tax on any capital gain at that time. In my taxable account, it would be the last place that I would sell because you have embedded capital gains. Now, this is if I still had to pay the tax on that. So it doesn't matter to me if something is called away at 55 that I bought at 43 and then I sell 55 puts for, I don't know, $1.20 and get it put back to me at 53 and change. But again, it comes down to how do we get to 55? Right? That's what matters more to me is how do we get there? With 62,000 shares, I'm not that eager to sell too many puts unless we have a big drop down. I'm not that eager to sell too many puts. So I'm tying up a lot of capital and I'm not generating a lot of income because the dividend's only about 3%. So I'd rather lighten up and from the lightened position be able to sell those puts because I get nice premium on the puts. I'd rather do that. If the stock surges one day, this is the chance you take by selling calls, right? It's the chance you take. Does the Applied series have content about BDCs? Currently, no. I feel the Fed Where'd that question go? I feel the Fed won't be as worried about a slightly hotter CPI. Okay. Because we are dealing with the very low base effects from last year. Surely they would take that into account. It's the month over month that's going to be the concern, not the year over year. It's the month over month. The expectation would be for a change in base effects year over year. So if it comes in hotter than that, that was already, the forecasters are not unaware of the base effects. That would be in the forecasts or the consensus estimate of where we would land. It's the month over month we got to worry about. So you're looking at increased inflation in Mexico. You're looking at increased prices in the ISM services for July. You're looking at a 2.8% month over month increase in used car prices for July. You're looking at container cargo prices out of China going straight up, way higher. I shouldn't say just out of China, out of the Asia area going straight up. Higher than July, higher than June. Well, that's going to add to the landed cost of everything. There is evidence to suggest that CPI for July, when we get it on Wednesday, may come in hot. I'm not seeing evidence where I can say, well, it's going to be a significant drop down. Look at the evidence we have so far. If there is a big drop down, it would be inconsistent with some of the other things that we have seen. If there is a price increase, if CPI shows a jump, it is consistent with what we have seen. I would seem to think that the probability of an increase in the CPI on Wednesday is high enough that I wouldn't want to take a whole bunch of long positions before Wednesday or sell a whole bunch of puts before Wednesday. That's sort of my thinking on that. Update on how you're managing the LW and GT. Lamb Weston is fine with me. I got it put to me, average price of 71. I've made, I think, $1.05 on the option so far. So my average price is now $69.95. And I think I have, if it finishes above 60, I got 60. I rolled some 60 puts forward. I got 60 puts, 55s, and 50s that would pay very well. But I sold 60 calls on a 50-60 risk reversal. Well, not risk reversal, short straddle. I think I would do okay, and I'm comfortable with Lamb Weston. I would like them to end next Friday. The best outcome for me, the single best outcome for me, would be for them to end at $59.99. I may be asking for too much, but anything under $60, but just shy of 60. I don't want them to end at 55, but just like $59.99 or $59.90. Then I close the August puts at a nice profit, and then sell, go into September and sell some of those. That would be the single best outcome. Goodyear, I'm trying to get a synthetic on it for free. In other words, whatever the carry costs me, I'm trying to, because I own the shares now, I'm trying to turn it into a monthly synthetic, because if I can do a monthly synthetic, I can pick up about 20 cents a month on the rollover. I thought I would have it on Friday. I had a bid. I was my price was 801. And I saw the offer at 796. I thought somebody's going to cross the spread for me. I'm not crossing it. Somebody will cross the spread for me, and it didn't happen. I need Goodyear Tire to, threaten the $8 mark, and then I'll get it for free. I'll get the synthetic, and that unties a bunch of cash, which then has a cash return, right? But Goodyear, I went through their 10K again on Saturday, because I was thinking about it, saying maybe I should just leave it. I went through their 10K again. No, I'm going to keep it, but I'd rather roll it into a synthetic and a rolling synthetic rather than have a long position, because I can use the cash and get 5.5%. They have a plan for cost reduction. They're on track on their plan. On the last quarterly report, they showed the progress they're making on each of the cost reductions, what their target is for the year, and how far they've gotten on each one. They're on track. They have a guaranteed firm contract in place for the sale of their off-road tires for 900, I think it's 955 million, call it $1 billion. That's a done deal. That's a done deal. So they're going to get rid of that unit and they're going to get $1 billion in, which, I think they're focused on debt reduction as well. So I looked at all of that and I thought, this isn't, it's certainly not a growth stock. It's certainly not anything that I would say, this is going to $20, but at the price that it's at now, if I didn't own it, I'd have a hard time not wanting to have some position to it. I'm unwilling to sell more puts at this point in time because I don't know how the market wants to treat it. And you have to worry about that. If I have to take a loss, it's as far as the percentage of my portfolio, it's super tiny. It really wouldn't affect me that much. I made more on Vega last week than I would lose. So it's, I could look at it as saying that's a free position. But it's more of a challenge at this point in time as I look at it and I say, how can I work it down? I got a lot to work off. But it's, I think it's the right price where it needs to be for a while. I just like to turn it into a synthetic. Will there be even more detail in your new positions when it migrates over to applied? Well, all I've been doing in the market outlook is giving you new positions. What is going to be in the applied level is not new positions, going to be positions. So I will list every position I have, whether it's new or not. So you can see from week to week, like FCX, you can see exactly how many shares I have from week to week and whether I'm selling shares or buying shares. You can see exactly where my calls and my puts are, exactly what dates they are. I will put out every week what my positions are, so that you see my portfolio. I may not include speculative positions, so that if I took a position and I said, I don't know about this one, I probably won't tell you. For the simple reason that I don't want you copying it because I don't even know if I like it. Sometimes I don't know if I like something till I actually take a small position in something. And I may take a small position, go, okay, I can work with this, or I may take a small position and say, you know what, I don't like this one. Now that I've started to work the options, I don't like them. So COPX is something that, really only works for at the money. And I may own COPX, but it's not a very good one for options trading. So I don't know. Probably going to keep it, but knowing that it's for the options, it's really limited. You're really playing front month options only. Going out 2-3 months, there's no liquidity. Wide spreads. It's not great. So for some speculative positions, I may not share it with you. For example, being short, the short position on Tesla, I don't mind telling you I'm short, but I probably won't share it with you because I don't want you copying me because it's a high risk trade. But it'll have a lot more detail. And when I'm adding a new position, it will be my thought pattern will be laid out a lot more. Yeah, it's going to be a whole module on its own. So it's going to be significant, right? So it'll lay out my whole argument of why I like this and what my strategy is. My strategy could be I'm going to sell 30 delta puts every single month until I have this many shares, or I'll basically say what I'm doing ahead of time. I don't want to be one of those people at the end of the week. I hear on some podcasts, oh, well, we thought the market was weak on Tuesday, so we sold. We were right. We bought it back Thursday at 11:25. It turned out to be the bottom, and we were right. And, there's some people on podcasts. There's one, I forget his name. But I listen to him. It's like he seems to just buy everything right at the bottom and sell everything right at the top. Every week he tells you what he did, and it's always so perfect. And it's like, my God, you've got this incredible talent to time everything, sometimes to the minute. How do you do it? And I think that if we said, why don't you tell me up front what you're going to do, and let's see how well you do. Tell me ahead of time what you're going to do. Same with Kramer. Have your show on at 6 in the morning and tell me what the market's going to do if you want to impress me. But showing up at 6 p.m. at night and saying, here's what the market did, well, I can do that. Any idiot can do that, right? But I will tell you ahead of time what I'll be doing. And then I have to live and die by the success of what I say. It'll be out there for everybody to see. I think I've done enough of it over the last 2 years, telling you what I'm going to do ahead of time. I've done enough of that to at least earn a track record. I think if you went back through everything that I did, I think you'd find some big glaring mistakes, but I believe that I'm about 90% right. My biggest mistake last year was short beta. It just kept going up and up and up. And then my big mistake was covering short beta just before the market went down. Damn, I have an uncanny way to time the market. How does the yen carry trade unwinding affect the stock market? Again, I don't know the answer to that because it would require me to speculate how much of the borrowed yen went into the equity market, right? Would early rate cuts support the market going back to overvalued levels? Well, okay. So this is how an analyst would think about that. You're saying early rate cuts. So it's not a question of rate cuts would do what? Why am I getting early rate cuts? Am I getting early rate cuts because inflation is coming down very, very quickly, but the economy is doing well and all the economic data is fine and earnings are good? Yeah, that would be supportive of markets. That would be very supportive if rates were coming down. Are rates coming down because the economic data is getting worse? And earnings are contracting? No, because an early rate cut would signal that the Fed's even concerned about that. And things don't just turn around on a rate cut. Oh, you might get a bounce and then down we go. So it's not a matter of what happens. It's a matter of why did it happen? That's the thing you want to look at. So if we say, well, okay, if the Fed came out tomorrow and cut 50 basis points, it's like, oh, they cut 50 basis points. Why are we selling off? It's not the what they did, it's the why they cut 50 basis points. Something must be wrong. They must know something. Something must be wrong enough for them to do this. That would probably have a small rally on the news. And then as people thought about it later on, well, there's hidden risk somewhere. I think there would be a sell-off. So it's not really what happens, it's why the thing happened that you would want to think about. Given your high conviction on XLU NEE, can I assume you believe it will have high chance of outperforming SPY? Utilities always outperform, a 100% track record of outperforming in a rate cutting cycle. In other words, typically rate cutting cycle is usually a contraction. 100% record of outperforming, and not only outperforming, but delivering positive return. So it will always outperform SPY in that scenario. 100% record of doing that. Will it outperform SPY? The utilities have great dividends. They have a beautiful dividend and an increasing dividend over time. So with the judicious use of options, I can get 20%. So the question is, can SPY give 20%? Right? So utilities will outperform SPY. I think if you look over the next 18 months, utilities will outperform SPY. Or is it the Sharpe ratio is better? It may not outperform. Well, I don't know if the Sharpe ratio is better on utilities. You can create a better one, although a purist out there would say, whoa, 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 whoa. If you're putting options in your portfolio, you're going to have a non-normal distribution. You can't use standard deviation of the portfolio as the denominator in the Sharpe ratio because it violates the assumption of normality. That's a purist, right? There's some validity there, I guess. In IBKR, is there a way to know the margin impact of an individual position once having entered into it? When selling options, do margin requirements change as options decay? Margin requirements change as the distance between the stock price and the strike price changes. Not so much as they decay, but as the distance between the stock price and the strike price changes. Buy and hold portfolio with no options. Would you be heavily overweight on XLU? Buy and hold with no options. Well, I guess I would say, how old are you? If you tell me 25, I'd say, well, then if you're not going to use options, go for something higher beta. You're 25, you can take risk. Don't be in SPY, be in two sectors, be in consumer discretionary and technology, XLY and XLK. If you're 55, then yeah, I think being in XLU and REITs is going to give you a better risk-adjusted return than SPY. Will you ever consider Mag 7? It's not that I'm averse to Mag 7. It's just I'm averse to very overvalued stocks. Mag 7 are very, very overvalued. I am considering one of the Mag 7, Tesla. I am shorting Tesla. So you could say that, yes, I am considering one, but it's not a matter of, am I drawn to these names? I'm turned off by the valuation. It's just simply too high. Using GM, FX, Oxy, Coke for Theta play. Could you please name some more with 20 to 40% IV? Well, I think a lot of utilities are close to 20%, but just under 20%. On semi is a good one. If you can live with the volatility, on semi is nice. I'm hesitant to name a whole bunch because what you don't want to do is load up on them, because if you got a whole bunch of puts, be aware that Wednesday could be a deadly day for you. If if that CPI comes in higher than expected, Wednesday could be a very deadly day for you in terms of your margin. You don't want to overdo it here. Can you continue to do position updates in applied level for subscribers? I will be. It will move after August 25th. It moves to the applied level, and for the applied level subscribers, you'll get the position updates every week. How is a tax regime for financial assets in Costa Rica? There is none. You only pay tax in Costa Rica on money you earn in the country. Only money you earn in the country, and that's it. What do you think about the two deceased whistleblowers at Boeing? I'm curious, right? Do you believe the company had something to do with it? No, I just think it was a coincidence, but it certainly is good for conspiracy theorists. I've done studying for level 2 and now reviewing material. I did the videos and the MCQ, scored good average on the practice, but I'm still nervous. Any last minute advice? My last minute advice is the same to everybody. Whatever makes you successful, in past exams, do that and just do more of it. Just lean into it, right? That's the last minute advice that I have this close to the exam. What do you think about the changing world order theory of Ray Dalio? I don't really listen to him, and I've never really paid attention to it. I've never really sat and listened to it or read the book. I've never really listened to it. So I mean, I really don't know. I could listen to it and say, well, yeah, I've been thinking the same thing. I just never called it the changing world order. If it's about, the decline of U.S. influence and the rise of influence of other countries, that's kind of been going on for a while now, right? I mean, it's been going on for a while. So I don't know if that's what it is. I don't know that I'd call it the changing world order. Besides, couldn't you describe history by that? History is being the story of a changing world order. Empire to empire to empire to empire, trade flows going this way, trade flows going that way, financial centers rise here, fall here, rise over there. Isn't that just the history of the world? To say that what you're going to have going forward is change. Change is the constant. So again, though, to be fair, I haven't really listened to it. So much of the economy is immune from interest rates. Is this possible? Sure. I thought that if you hedge a risk factor, is only because other side is taking that risk. Well, because the other side wants that risk. So I'm an oil producer. I'm worried about the price of oil falling. You're an oil consumer. You're worried about the price of oil rising. There we go. There's a marriage where we're both happy. We enter into a contract, we lock in a price. I don't have to worry about the price dropping. You don't have to worry about the price rising, and we're comfortable at the price we agreed at. For everybody who has to pay interest, somebody has to receive interest. I have an asset, and I'm going to make a series of 3-month deposits. I don't want the interest rate to go down. So I want to hedge against interest rates going down. You have floating rate debt. You don't want interest rates to go up. Hey, why don't we make a deal? Right? And this way here, you don't have to worry about rates rising, and I don't have to worry about rates dropping. For every contract, the other side is just as happy to be in the contract. That's what makes the derivative, right? Oh, my voice. I have completed CFAI content next week. My exam is on the 14th of November. It's a long time away. Rest of the time reviewing practice questions. Well, of course, yeah. You're not gonna say I'm done. You'll forget most of it by the time you get to November. So yeah, you'll continue on. Schiller PE ratio adjusted uses the annual earnings of the past 10 years, adjusted for inflation. Is this the right thing to do since the price is also affected by inflation? Well, it's real earnings. That's all you're doing is just adjusting earnings for inflation. Yeah, I mean, that's all you're doing. Yeah, I don't see a problem with that. Is there a reason you do not generally trade the NASDAQ? So NASDAQ is more volatile than S&P. I don't know that I would say that the return divided by the volatility is greater than S&P. In other words, its risk-adjusted returns aren't greater. And if its risk-adjusted returns aren't greater, why not take a lower risk security and lever it up to get the same return? You'll do it at lower risk. So if the Sharpe ratio of the NASDAQ is, I'm going to just make numbers up here, 0.4, and the Sharpe ratio of S&P is 0.5, why not lever up S&P to get NASDAQ returns? You're doing it, you're getting the same return for lower risk. You don't have to go for highly volatile securities. You can take a low volatile security, use leverage, you can get the same return with significantly less risk. Isn't that preferable, right? You said Musk should step down as CEO, but Tesla rallied after his compensation package was approved and the confirmation that he's in. This is confusing because the market seems scared of him leaving. The average shareholder of Tesla is more concerned about the cult of Musk and the cult of Tesla than the fundamentals. I think that's slowly changing. I think more and more shareholders are less willing to buy into this incredible future. The last rally went to 250, 260 before it lost steam. It didn't do the $300, $400, $500, $600, $700 rally that you would expect. You know, it didn't hit new market cap highs. It got to, I think the highest market cap it had was at $1,200 was what, $1 trillion, just under $1 trillion. I think this rally got it to 750, 800 billion before it failed again. And, you know, you're getting more and more analysts, you know, actually coming out and saying the emperor has no clothes. 2 years ago, you wouldn't have gotten that. Every analyst was on board. Now you're actually getting some analysts that come out and say it's very doubtful that this can happen. I think you're having more people realize that, you know, with something like 50 or 60 robo-taxi companies in the world, actually with vehicles on the road competing in different countries, Tesla is way behind on that one. And with the idea that you're going to have this robo-taxi platform, Uber is already there. In Phoenix, you can use your Uber to call a Waymo. They're already there. They're already there. Uber's already in 140 countries. So Tesla is way behind. And we had earnings from Lyft last week, and they can't compete with Uber. So it's, you know, when you look at the reality of it, they are way behind. More are starting to recognize that you can't just sell a dream anymore. You did okay. You introduced a vehicle in a market where there was nobody. And I think you did well with the Roadster. I think that was what you had to do. You wanted to create the halo effect that then transferred to your other vehicles. And I think it was wise to follow the Apple strategy of positioning your product in movies. And every time there was a rich household in a movie, there was a Tesla there. That was the wise thing to do. And it was also the wise thing to keep your freaking mouth shut, stay out of the culture wars. But now he's all in on the Trump side. EV buyers are mostly Democrat, not Republican. They're mostly Democrat. This is not a good position to be in. You are not going to get the Republican core, you know, pickup trucks, hunting, guns, and country music buying EVs. They're not your customer. They're not your customer. You're not going to get that. So I just don't. I don't think that he's an administrator. I don't think that he does well with a company that, you know, at some point you have to stop growing your company. You have to know when to transition from a growth CEO to a mature company CEO, or at least a maturing company CEO. You can't run your business all the time in growth mode. You have to, at some point, transition. He's not doing that. And I think he's a liability at this point in time. Considering what his target market is at this point in time, and the political leaning of the majority of his target market, it was not a wise choice. It was not a wise choice. The market outlook. Why do you associate the surprise factor with earnings growth? Aren't they different things? No, you have earnings estimates, and then you have a surprise factor. The surprise factor is not associated with earnings growth. It's associated with when companies do report, how much higher than the expectation were they? That's the surprise factor. So that if we're looking at the forward PE and you say, okay, well, if the surprise factor was 4.5% and you have forward earnings of $252, well, let's increase it by 4.5% because if the surprise factor is 4.5, maybe they'll continue to surprise by 4.5% to the upside. So you can see, well, let's say it does come in way above expectations for the next 4 quarters. What would the multiple be? So that's why I include the surprise factor. Do you use intrinsic versus historic volatility or versus historic IV to know if it's high or low? Historic IV, not versus historic volatility. IV will always overstate historic volatility, and I'm not really that concerned about the historic volatility, but it's versus previous IV. Mute button not working. You can hear the cough. Can you really? Hang on a sec. I think you meant before when I was just covering the microphone like this. Yeah, that probably wasn't working, but there is a mute button at the bottom of the screen. I'm pretty sure it's working because when I hit mute, I'm swearing at all of you. Jesus fucking Christ, fucking idiot. That should have been on mute. Are you hearing me when I do that? I'm calling you all names when I hit the mute button. Preferred school of philosophical thought to live. I don't know if I have a preferred school. There's good stuff everywhere. Rousseau had some good stuff. The Greeks had some good stuff. Stoicism has some good stuff, some good advice on how to conduct yourself in certain situations. But I don't know if there is, I don't know that I would say that there's one school of thought where I go, oh, that's it right there. That's the answer. There's something in everything, and there's some things you reject, right? So, for example, I think the philosophy of Nietzsche is quite interesting, but I do reject certain things. That the idea that, and it's not so much I reject the way he says it. I reject some interpretations of it, even by some scholars of the philosopher that are way beyond me in this topic. But I do reject some things. The more common one I reject is that the great man that Nietzsche was talking to in his philosophy, he's talking to a very few group of people that can rise above crowd morality, and reject the crowd morality. I disagree with that. I don't think that that's what he was saying. I think what he was saying is that you don't accept crowd morality, but that you can come to that morality on your own. You can come to a conviction on your own as being a way you want to live your life that is consistent with crowd morality, but you're not accepting it from the crowd. So there's much of the crowd morality that I would reject, especially postmodernism. I would reject most of that stuff, or the postmodernism of the day was Christianity, that sort of changed the way we view morality. I would probably do away with a lot of that, but not all of it. Just because I would not accept a morality given to me doesn't mean that I think it's okay to treat people like shit. I don't think it is. Whereas, something like that would have been seen as part of slave morality, as Nietzsche would have called it. It's more slave morality than leader morality or great person morality, because the great person sees people as just a tool towards some great end. if you can get to those ends without treating people badly. So yeah, I accept some things in different fields, and I reject some things as well. I reject most of Christianity and their morality. I think Jesus Christ was full of bad advice. I mean, just really bad advice overall. I don't even know why you would even listen to the guy. It was just bad advice. Not too many people would say that, I think. Do you print the 10K and read on paper? Never. I stopped printing years ago. I stopped taking plastic bags from stores way before they started charging you for plastic bags. I stopped taking bags a long time ago, saying I could just put them in the cart and carry them to my car. I don't need the plastic bags. I'm not a bleeding heart liberal in any respect, but I know the damage plastic can cause. I know I'm only one person, but solutions are like rain. It's little drops of rain can create a flood. No one single drop of rain can do anything, but many drops of rain. I'll do my part. I'll do my little part. It makes me feel good. So it's not printing is something I haven't printed in a long time. I got a printer sitting over there. I don't print anything. No, I just put it on the screen and I highlight with yellow. But I can't remember the last time I printed anything out to read. No. Even now we get last couple of years, 4 or 5 years, we've been getting, as providers, we get all the CFAI material in digital form. You can print them if you want. I never do. I used to. Way back, I did. I don't know why I did, but I did. And then after a while, I just said, "This is nonsense. I'm not going to print this anymore." Whenever I get mail from any company, any place, I always go online to see do you have something digital? I don't need it. I don't need the paper copy. Do you have something digital for me? But I try not to use paper. What is an initial time frame before the exam to study ethics? I think a couple of weeks before the exam, because it is a memorization thing, right? And memorization is short-term memory, and short-term memory has a very quick decay rate. So you want to put it in short-term memory as close to the event that you need it as possible. Does theta decay the same way during weekends and holidays? Theta in front of weekends usually comes out of the price of the option on Friday. Once you get to about Friday at noon, Friday at 1, the theta, the time value has come out of the option for the next 3 days. Why did ABR January 2024 1750 call from 30 to 10? You mean January 2025? It didn't fall from 30 to 10. It fell 10 cents. I think it was you can get 20 cents for it when ABR price is up because volatility is down. Earnings was good. Yeah, the 10-year is still below 4. Yeah. Supply and demand. That's all it is. Just supply and demand. Is there aren't that many people demanding the 1750 call. I have the 750 puts that I sold against the 1750 calls. It didn't cost me anything to get that done. That was free for me. So that's in a gain position because the 750 puts have decayed more than the 1750 calls. So I may take the profit on the puts and roll them up to 10 and let that decay, take the profit on that and be done with it because then those 1750 calls will be completely free. I'll have earned my 30 cents back on them all. You have any hobbies when you're not making content minus practicing piano? I really wish I could play an instrument. I really do. But I mean, I tried piano and I was basically told, it's not for everyone. And this is the teacher telling you it's not for everyone. You get the hint. And then I sold my piano. I bought a piano because I thought I'm going to learn piano. And then I sold my piano. I think I got to play like 2 songs or I learned 2 songs. and that was it. And I wasn't that good. I honestly wasn't that good. Hobbies. I have a full commercial gym in my basement. Someday when I'll do a live on the iPad and I'll walk you around the house. So I'm down there every day. I have a full cardio room at the back. I built an addition to the house, so there's a treadmill, an elliptical, a stairmaster, a bike in there. There's a TV on the wall. Right now, it's turned into an art studio, but I do that. My hobbies have mostly been up here. When I have hobbies, it's hobbies of the mind, things that I like to read, things that I like to learn. So it's mostly that. In a video, you said not use one strategy for your whole portfolio. Correct. I think I know what you mean, but can you elaborate? I think you want us to implement different trading strategies with our account. Well, yeah. I mean, you can't just have one strategy. If you are a momentum trader, at some point, momentum is going to hurt you. If you're selling puts, at some point, that's going to hurt you. If that's your whole portfolio and you have one strategy, there will come a point where your strategy is out of favor and it's going to hurt you. So you want to have several different strategies that you follow. Maybe 1/5 of your portfolio you use to sell puts and generate income on. Maybe 1/5 of your portfolio is a buy and hold of good dividend paying stocks. Maybe 1/5 of your portfolio is, a momentum stocks, growth momentum stocks. And you identify them with 52-week high lists. That's a great way to identify momentum. When I first started trading, that was a wonderful way to do well. I found some really great stocks on that list that I kept for trading for quite some time. This was my pre-options day where it was just buy, sell, buy, sell. But be diversified across different asset classes and different sectors, but be diversified across strategies as well. But yeah, I think you want, yeah. What consequences you see for US and EU debt? Well, what are we seeing out of the UK right now? What was the last forecast for the number of millionaires that are going to leave the UK? Something like 2,000 or 3,000 millionaires will be leaving the UK in the next couple of years because of high tax rates coming. Look at migration patterns in the U.S. You have net migration out of New York State, Illinois, and California, net migration into Texas and Florida. Is it any, it shouldn't be a shock that the in-states have the lowest tax rates and the out-states have the highest tax rates. I mean, it doesn't take a wizard to put that together and say, well, that can't be a coincidence, right? It can't be a coincidence. Dubai is full, right? Dubai is a tax haven, and you can't. There was a couple of years ago, like this time last year, you could find houses listed. Now go and look at for a house that's listed. They're all just pictures of something that's going to be built in 2025 or 2026, right? It's full up. So capital is fleeing these countries, and they will continue to flee these countries because what choice have they got? Whenever a high income person leaves an area, you need many, many more average taxpayers to make up the shortfall. Well, you're not going to get that many more average taxpayers. If you get a whole bunch of these people leaving, you just can't do it. Unless you cut your spending, you're going to have to raise taxes even more on the successful people that are left, which will push more of them out, which means you got to raise taxes even more on the successful people that are left. I strongly recommend you to read Animal Farm, and I want you to think about the horse and ask yourself, do you in these Western economies that are loading up on debt, if you're successful, you are going to be the horse on that animal farm. Do you want to be the horse? I don't want to be the horse. No way. So people are leaving, and you can only lose so many of us before you can never make it back. You'll never get it back. Once you scare capital away, tax rates rarely go down. At least in Canada, I can't remember when tax rates have ever gone down. Even the conservatives that look like they're going to win the next election aren't talking about lowering taxes. They're talking about cutting out certain types of taxes like the carbon tax and that kind of stuff, but they're certainly not talking about lowering taxes. And when asked whether or not he would roll back the capital gains inclusion from 66 to 50, he was really cagey. He just wouldn't answer the question, which means no, he's not. Is he going to balance the budget? He says so, but once you get elected, you want to keep power. You don't keep giving people money, you're not going to keep power. This all ends badly. You will get convergence because capital will leave the Western countries and they'll go to developing countries, and it won't be long before the developing countries are developed and the developed countries are developing countries. Then you'll have convergence, right? But unless somebody comes in, listen, you can't just cut taxes, right? Because you'll just make the debt worse. You have to cut spending. You have to take all of this nonsense spending that's going on, and you got to get government out of people's houses. You got to get government out of people's lives, and you have to let people live with personal responsibility. Your lifestyle choices should not be my tax bill, right? If you want to have 4 kids, you have 4 kids. I should not have to pay an increased tax rate so the government sends you checks every month because you have 4 kids. You made the choice to have 4 kids. Nobody forced them on you. Society didn't force them on you. You made a lifestyle choice. Don't send me the bill, right? I'm not interested. You're the one addicted to drugs. Hey, if you want to go to rehab, okay, I'll pay the taxes for that. But to give you more drugs, to keep you safe, to give you a safe supply of drug. What a stupid term. Here's a safe supply of drugs. You need a government to come up with terminology like that, right? I disagree with that. What the hell are we doing? What the hell are we doing? I think this liberal experiment has got to end, because after how many years of this liberal experiment, you've got more of everything they say they wanted to solve. You have more homelessness, you have more poverty, you have more crime, you have more drug use, you have more ODs, you have more of everything that they said they wanted to solve. The compassionate party has actually created more misery than anything. And this is what you would get if you let your kids make decisions about what they want to do. You never do that. Tough love. You're going to eat the vegetables on your plate or you're not leaving the table. But a liberal parent would say, well, what would you like to eat? What can we do? Can we sit and discuss what your meal plan would be next time? We'd like your input. You're a young adult. You don't want to be, you're 4 and you don't want to be a boy anymore? Well, let's get that. What ridiculousness, what goddamn ridiculousness this, see, you've got me all upset now. This liberal experiment has got to end, because all you're going to do is get more madness, is you're going to get more of the very thing you're trying to solve. Compassion, have compassion, yes, but sometimes compassion means making a tough decision. If you really cared, you wouldn't give them drugs. If you really cared. But I'm not a liberal, I guess, because I think it's stupid to give a drug addict more drugs. I think it's stupid to say, you live on the streets, here's a place where you can inject for free. Let's make sure you don't die so you can come back tomorrow and get more. We'll give you more drugs, but we will not suggest counseling for your addiction because we don't want to stigmatize your drug use. What the fuck is that? Only a liberal can think stupid like that, right? Okay, I got to calm down now. Look what you've done to me. 30% of an account dedicated to Theta strategy, 30% to momentum trading with options, 40% to buy and hold, maybe some option selling. Where's your margin? So what you got to do is you got to say, okay, I've got all of that. What if it all goes wrong? What if the market pulls back 10% over 4 days? Are you going to be okay? Or are you going to scramble, right? So what I do is I look for short positions to extend my long positions. You have nothing that will earn you any money on the way down, right? unless when you say Theta strategy, unless you have a balanced Theta strategy where you're selling calls and selling puts, even if you are, your puts will lose you money faster than your calls will make you money if the market drops. So, when I say that I'm shorting the market, why would you do that? It's because it allows me to extend my long positions without worrying if the market drops. That if the market drops, hey, I got short positions, that'll take care of it, right? So 30% to Theta, 30% to momentum, 40% to buy and hold. You're fully invested. What if the market drops 10%? Right? You're going to hurt. You have no wiggle room in that one. You have nothing that's going to help you on the way down, unless your 40% buy and hold includes a good allocation to utilities and duration, so that if we do hit a recession, your utilities and duration will do very well. You're going to get killed on some of your other things, especially your momentum. When are you going back to Costa Rica? September 20th for a couple of weeks. I got to go for a couple of weeks. Then I got to come back for a while. Then when the nice season is back, I'll go back. But I got to go back and take care of some things for about 3-4 weeks, do some upgrades to the house. Still watching CMA copper inventory? Not really. From week to week, I wasn't seeing any change. It's not really a big deal. I'll see it in the price. Chinese copper inventory flooding the market, causing the price to drop below 4. I don't know so much that it's a Chinese inventory that's flooding the market. As much as we're not, even when the price was going up 450, 460, 475, I said, copper doesn't behave like this. It's behaving like a meme stock. Copper doesn't move this way. This is overdone, but who the hell wants to short it? There is no shortage of copper today. There will be, right? There will be. So it was too much to the upside. Now copper is starting to price in, maybe a hard landing. So we're sitting at a little under $4 a pound. Do I see 350? No. Do I see 450? No. Do I think we're pretty much where we should be? In and around here, yeah. Okay, what do we have? You often refer to delta as a probability, but I believe this isn't exactly how it's described. No, it's not. It's not. But you can think about it as it's close, but it's not a one-for-one interpretation, but it is often used as a probability. Is there any alternative interpretation of gamma? Gamma is the rate of change of delta. It's a second derivative with respect to price. First derivative with respect to price is delta. Second derivative is gamma. Gamma is the rate of change of the first derivative. You always said manage risk. I have lots of short puts on TLT ahead of Tuesday, Wednesday. Would you offload some given the event risk we have this week? If you're comfortable being long TLT, no, I wouldn't offload any. I'm not going to lighten up my TLT position, but I did sell calls because I just don't think at $99 pushing $100, it didn't make sense. We're not there yet. We're not there yet because the committee is not there yet. So they still have mouths and they're still going to speak. So they're still gonna have an effect, right? Until they recognize that they have to cut rates, TLT doesn't belong there. TLT is not sentiment driven. It's well, I guess you could say it's sentiment driven in a way because yields are sentiment driven. But TLT is mathematical. Well, here's the thing. I think Wednesday is a big risk day. There is evidence that if inflation comes in hotter than expected, that there is evidence that would have been consistent with that. And the data lately have been more consistent. However, for the longest time, a lot of data was inconsistent. You had some readings that said this and then another reading that said something completely different. It's like, well, this is inconsistent. We could go back to inconsistent data. I just don't see myself wanting to put a whole bunch of short put positions on before Wednesday's CPI. I hope I'm wrong. I hope it comes in lighter than expected, and then that gives me more conviction to sell puts and add to long positions. It would also give me an opportunity to short the market at higher levels to get a larger position, because I started shorting it, but I don't have as large a position as I would like to have at this point. So as far as Wednesday goes, I know what I'm going to do if the market goes up. I know what I'm going to do when the market goes down. I look at what I have right now and I say, could I live with 10% down on everything? Yeah, I could live with 10% down on everything. Then I'm good. Can you live with 10% down? TLT is 96.50. Could you live with $9 down? And if you say no, then, although I don't think TLT could move 10%. Where do you watch the Fed speeches? Right on their site. They put it right on their site, and you can sign up for notifications. Leave your email and they'll send you notifications, and you get an email saying speech is up. Did Barkin not speak this week? He's speaking this week. I don't know if Barkin was barking last week. The FOMC, the Federal Reserve site is reserved for the governor's speeches. Each of the independent Federal Reserves will have the speeches by each of the independent presidents of each reserve. So Barkin is Richmond. So you'd have to go to the Richmond Fed and sign up for email notices. And whenever he gives a speech, you'll get an email notice. So the Federal Reserve is just the governors. If you were in America, would you vote for Kamala or Trump? That would be a tough one. I'm insignificant, so I don't actually have to say I'd vote for Trump. I'm insignificant. If I were in the U.S., the more important I am in the U.S., the more I better say I'm voting for Trump, even if I'm not. I have to say it publicly. Because if I need the government for anything and Trump wins, he'll remember. If I didn't bend the knee, like if I'm a visible person and I didn't bend the knee, he will remember. And if he's ever in a position to hurt me, he will hurt me, because he's a small, petty man inside. Even if you're a Trump fan, you must recognize that. You must recognize that in him, that it's not enough for him to win. You have to lose, and lose disproportionately. And if you didn't show him adoration and love, that's enough for him to hurt you. But if Harris wins, and I was a Trump, and I said I supported Trump, Harris wouldn't hurt me. Harris wouldn't bother with me. Harris wouldn't care. Harris is not going to look for retribution from anybody who didn't bend the knee to her. Trump will. So you almost have to say, I love Trump, I support Trump, even if you don't, if you're a visible person, because if he's ever in a position to hurt you, he will. He's very much like Stalin. When Stalin walked into the Duma, which is, you call it Congress or Senate or Parliament, everybody would stand up and start clapping. And he would walk in and he would look around. Who's not clapping? Who's not clapping? And God forbid you're not clapping, because you're dead. You will be purged. You will be next. You will be dead if you're not clapping. And then he would look for the person who stopped clapping first, and you'd be dead. Not until he told you to stop clapping would you stop clapping. And sometimes these clapping sessions went on for 10 minutes, where you stood and you just clapped and you clapped and you clapped. Look at China when they show Xi Jinping walking in. Everyone's standing up and they're just roaring and clapping, and nobody wants to stop clapping first. Same with North Korea. Nobody wants to stop clapping first, because they know what's going to happen to them. Trump is very much like that. If he walks into a room and everyone's standing up and clapping, and you're just going to sit there and go, oh, no, not when everyone else is standing up. He is a small, petty man that way. So I would say publicly one thing, but who knows what I would do. I don't know that I can vote for the Democrats given their ideology until they purge their party of the stupidity of the progressive wing. I don't think that I could vote for them ever, which means you'd almost have to vote for Trump only because you could not live under a regime that continues this stupid experiment that they have going on. Besides, the Democrats would only raise taxes on successful people. Why would I vote against my own self-interest? Right? As one person said it, you could what is it? You could vote for your own liquidation, which is what the Democrats would do, or you could vote for Trump, or you could vote for your own liquidation. Any E&P companies you'd recommend for a stock split? Oxy. I've been saying that for a while. Should I move to Costa Rica if Kamala becomes president? If you have wealth, if you have wealth and Democrats win, they will continue their spending and they will have successful people pay for it under the guise that you're not paying your fair share. No matter what you're paying, you're not paying your fair share because wealth, bad. Actually, they don't even see wealth as bad. They see wealth as evil. Wealth, evil. Right? Wealth is evil. So, they're punishing evil people. How would you manage your positions when you go on vacation and can't look at the screen for the next week or month? That never happens to me. If I had to go somewhere for a month and I couldn't look at anything, I would either not go. I'd say like it's just not a possibility. Sorry, it's just not a possibility. If I don't have an internet connection, I can't check in at least a couple times a day. It's not even an option. It's not even a possibility. And if I had to go anyways, I would go flat, or be in things that I really don't care about. Where the price went, that I was a long-term holder, but I just wouldn't take that. I wouldn't take that option of going somewhere where I couldn't do it. Aside from Black-Scholes formula, what else goes into the pricing of options? That's it. What's in Black-Scholes? How do you think dollar yen would react when CPI is higher than expected? I think the yen was, I think the whole unwind of the carry trade, I think, was overdone. I really do think the Bank of Japan wanted to get on this side of the zero line instead of the other side of the zero line. I do think they recognize that their currency is a funding currency and a carry trade. So why not make money on it? Why not at least have a positive interest rate instead of a negative interest rate, and we can at least make money on the carry trade. And I think they're done. I think you can see the yen probably weaken again from this point. NEE seems a little overvalued by your standards. Any concern with the current valuation? By my standards? No, I have no concerns with it. For a utility, you really should judge it by its yield, right? Because its price would be proportionate to its yield. Judge it by its yield. Yeah. Why don't you trade on day one? Why don't you trade on day one? What day is day one? You mean January 2nd? Why don't I trade on day one? I don't know what that means. When you said you did better than your managed money, it's just return on account value. What is your return percent this year? I don't know what it is right now. About 3 weeks ago on a Friday, when I calculated, it was 15.68. 15.68 on the one that I play actively in. Interestingly enough, my TFSA and RSP are actually up by more because I made 2 big bets on Capri. I made big bets last year on it, and I made big bets this year because it was in cash and I didn't know what to do with it. And then I bought a whole bunch of Capri, and given that it was one big concentrated bet only, ended up doing quite well considering what I had gotten out of. I remember now, in one of my RSP accounts, I got out of Arbor when that GameStop short was going on, and everything that had a short interest was just skyrocketing. Remember, Arbor went from like mid 12s to 13 to 14 to 15 to peaking over into the 16s. I was a seller, and then it came right back down. It's still a good $2 below where I got out, if not more. And then I got in a Cap REIT down at 43, and it went up. So I rode Arbor up, jumped out, got in a Cap REIT, rode that up, and at some point I'll probably want to move into something else in the RSP. I don't know what, but yeah, I was 15.68, 15.78 on the taxable account. Well, what would be considered a taxable account. I call it taxable because it's not a TFSA or an RSP. It's just a regular, I guess I should now call it a regular account. But when you call something for years and years and years, it's hard to, get it out of your head. So I'd take CFA, getting level 1 May. Looking at your website, was curious if you're planning any discounts, promos on self-study plus applied. No, we have never discounted. And even though I don't own the CFA side, there will never be a discount. There'll never be a Black Friday sale. There'll never be anything like that because our pricing, we feel, is already discounted compared to what you're going to get, and the quality of the education we deliver is, I think, some of the best out there, if not the best. So given our price point versus competitors, I would not hold out for any discount. Also, for the applied level, if you look at what you get, it is heavily discounted to compared to what I could get. All the time I've had the CFA business, and even with the applied level, one of the most common statements I've heard is you could charge more. I know that. I choose not to. I know I could charge more. I've heard it. I don't know how many times I've heard it with the CFA stuff. You can charge more. I know. I choose not to. I think you figure out how much it costs you to deliver and then mark it up from there. I'm not a fan of setting a price based on the value I think you're going to get. The value you're going to get is a function of you, not a function of me, but a function of you, what value you get out of it. Why should I charge you for what you are going to bring to the deal, right? So I would not look for discounts in what we do. No. Does data centers affect the demand on copper? It's not just the data center that affects the demand for copper, is you have to supply the data center with energy. You have to supply it with energy. So with the amount of energy that you need in one data center, when you're not measuring it in 1 or 2 megawatts, but you're measuring it in 75, 80, 90 megawatts per data center, right? Because it's not just running those computers. You got to cool that place. You have to cool it. So the air conditioning units you need are off the charts to keep that place cool, because those things generate heat. So you need to pump cold air in there and air cool. That air goes right into on top of the CPU. You got to air cool all that stuff, cold air. Huge amounts of energy. Just start Google searching how much energy does a data center take. Huge footprints, right? So it's not just a data center here or there. It's a whole shitload of data centers. And we're being told, we're at the beginning of this. I believe that. I don't think AI is going away. I don't think it's done. I don't think it's ready. I think this is V1 of whatever's going on with AI. I think there'll be some more breakthroughs. But fast forward 10 years, and I think we're in a much more digital world than we are now. Go another 10 years, we're in a much more digital world, and I think a much more electric world than we are now. EV will eventually be a bigger part of the market. I think it's a little too early, but it will eventually be a bigger part of the market. We will have more robotics in the house. I don't know what, a humanoid robot walking around, but 20 years from now, we will have more robotics in the house. I believe that. All of this stuff requires energy. You are going to have a shift to green energy, which requires even more copper than traditional forms of energy, because you need redundancies and that much more copper per installation. So if you believe in a digital future, then yeah, you need more. But if you think we're going back to a hunter-gatherers and an agrarian economy, then you can say, okay, well, all that will go away. I don't think we're going there. How are you so comfortable to sell vol all the time? Experience. Just experience. You do your homework. You understand the underlying. You know what you're comfortable with. And whenever you have spikes in volatility, those spikes never last long. They never last long. They always fade. They never last long. So you just go with history. Global economic conversion were interesting. I would love to hear you expand on the idea. Can you also have domestic conversions when people move around in a country? Well, I think that liberal parties today, Democratic parties today, believe that. They believe that you can have domestic convergence. You just need tax laws that redistribute. I am dead set against taxation for redistribution. To take from me to give to somebody else just because I have it and they don't, I'm dead set against that. But domestic convergence has a significant dose of redistribution, taxation for redistribution in there. To do it any other way, you need some kind of industrial policy or some kind of economic policy for growth. I don't think right now, I don't think Canada has a policy for growth. You need a policy for capital attraction. Well, when you keep raising taxes on capital, you don't have a policy for capital attraction at all. You think that, oh, we'll raise taxes and everyone will just take it. And this is how much money we'll raise. And all of those forecasts don't include, well, hang on, if we do that, this many people are going to leave. So we're really only going to raise this much. They don't think that way. They think we're all horses and we're just going to keep doing the work. Well, I showed them that that's not true. I don't know if they pay attention to me, but I'm one example of it not being true. Domestic convergence, you need a good economy. You need a good economy, and you need, I would seem to think, lower social safety nets. The cost of failure must be higher than what it is today. Right? When the cost of failure is low, well, if I'm going to get money from the government, why should I try so hard? You got to make the cost of failure significantly higher. You could lower the gap between the top incomes and the bottom incomes, between the top 10% and the bottom. You could even it out a bit without redistribution. But that requires a policy. And I've never seen a policy from a liberal ever. So, I don't know about that. That's more of a political thing than an economic thing. Do you have any tail risk protection in your portfolio? Yes, I'm short. I'm short the market. I'm short SPY. I will add to my short position. Let's see where we are. It's hard to tell where we are. to be honest with you. There used to be a time when futures on Sunday night had some meaning for the next day. We are down almost nothing, 4.5 points. So I really don't know how the market's going to open tomorrow. On Forex, we're pretty much nowhere. The yen is a little bit weaker, but not by much. Nothing's going on. Bitcoin's down 1.72%. Kind of boring so far, and I think it's going to be boring till Wednesday morning. I think that's going to be a bigger deal than most people realize. So yeah, I have tail risk in that I am short, and I will add to my short position. I'm short Tesla on shares, and I will add to that. And I'm short SPY, and I will add to that. We look at a chart of crude oil and put anchored VWAPs from the COVID low and the Ukraine war high. You can see price has been contracting within those bands for years. Straddle. I don't like to make decisions by drawing lines on charts and saying, look at these lines. I don't know that anything in my history, anything really good long-term has come from drawing lines on charts. I used to, and it's just like 50-50. And even now, when you look at a chart, you go, okay, well, the chart looks promising. What is, but you don't know much about the company at all. It's usually a recipe for disaster when you don't understand the company, because you're basing your trading on lines on a chart. The lines on the chart are drawn after the fact, not before the fact. They're drawn after the fact. So I don't know that I would. Yeah, I mean, maybe that's your thing. It's not my thing. How close are you from being a billionaire? Nowhere even near close. Is it possible to invest and trade to get $1 billion solo? No, not without attracting money, assets under management. No, you need other people's money. OPM. Option pricing models, just an academic masturbate. Every pricing model is theoretical. Every pricing model is theoretical. It gives you a good informed guess as to where something should be, but it is all just theoretical. Beta is theoretical. Duration is theoretical. Delta is theoretical. It's all our best guess of what we would expect to happen. And in some cases, the best guess is pretty good, but not exact, but it's pretty good. It's useful. And that's about the most you could say with these models is they're not exact. They're useful. They're useful in helping you to structure your thinking about what direction something would go in. But as far as magnitude and precision, not so much. But it's better than nothing, right? Passed level 2 in May. Started the applied portfolio management module. Is this the correct order? I feel like I'm missing info from the options. Yeah, you can jump back and forth from the options to the portfolio. In portfolio construction, we do use options. We do. So you can jump back and forth. I don't think there's any particular order I would suggest. If you're having trouble understanding something because of the options in the portfolio management section, just hop over to the options module and pick up some stuff from there and hop back and forth. What's on your reading list now? 10Ks mostly, just 10Ks. What are you currently reading? Mostly 10Ks. I'd love to be as well read as you. Oh, well, I mean, add a bunch of years, right? I mean, I'm probably much older than almost anybody in the chat right now by a significant margin. So over time, it's a decision about how you fill your time. You can binge watch Netflix for 6 hours in a night, but what's that going to do for you? It's not going to make you any better at any one thing. You can read something, and maybe tomorrow it doesn't make you any better at anything, but it does allow you to see the world in a slightly different way. Every little bit counts, and you never know when you're in a position to say, well, thank God I read this. I'm a little bit more informed about something, that I can think of a strategy, or I could think of how I would act, or how I would see this event. It's just with time passes, and it's the choices you make. Past level 2 in May, started the apply. Oh, I already read that. Long time quiet viewer, level 3 in a few days. Just learned that I have an interview set up for a rotation program leading to a corporate bond market maker. Any tips for the interview? I don't know. I'm so far removed from the job market. I don't know what employers look for anymore. Yeah, I don't know. I wouldn't know. Would you recommend I close out my QQQ shorts? I wouldn't recommend anything to anybody. I'm not in the business here of recommending anything. What I can do is highlight to you where risk is, and then you must decide for yourself whether it's something you're willing to accept. You have CPI on Wednesday. The market is hair trigger nervous about rates now. It wants 50 basis points in September. Last week it wanted an inter-meeting rate cut. It wants rate cuts. And the market is still pricing in 4 rate cuts by the end of this year at this point in time. You get a CPI on Wednesday that says the Fed is not even going to give you 1, or the Fed might just give you 1. This market's going to correct to the downside quickly. My opinion is that it would correct to the downside. Maybe it won't. Maybe it'll be while inflation is going up. Business activity must be there. Demand must be strong. Oh, that's good for earnings. Inflation is good for earnings because revenues go up with inflation, so up we go. It could be the completely opposite interpretation. I've seen that before, where you think, why are we going up? And you think, well, everybody interpreted this way. Everybody interpreted. I'm the only one who thought this was the other way. So all I can do is say, I think there's a possibility of this, a real possibility. What would I do if we go down? I know what I'm going to do, because volatility will spike, and I have some underlyings I know are limited to the downside. I'll sell puts on. Market goes up, I want to add to my short position anyways, because I do think that we are due for some significant correction, not just what we had last week, but something significant that continues on for a quarter or 2 quarters. So I know what I'll do in both directions. You got to determine what it is that you want to do. How long do you stay informed on companies when holding 10 to 20 stocks? Should I be reading every 10Q? I don't think you have to read the 10Qs. The 10K you got to read. The 10Q you can usually get through in about 20 minutes. You should know exactly what you're looking for in a 10Q. You should know what ratios you're looking for. You should know what key metrics you're looking for, right? You should know this. So I don't have to look at the balance sheet and say, okay, cash is here. This is this. Let me calculate this. I know what I'm looking for, depending on the company. You know what you're looking for. You can usually, in a 10Q, get it very quickly. 15, 20 minutes, you can get an idea of where you are, and you say, is this in line with what was expected, or is there something here that changes my mind about something? And if there's nothing that changes my mind, then you're good. I do listen to the conference calls. I do have them on the computer here while I'm doing other things, and I will listen just in case there's something that comes up where I think, oh, okay, I didn't read that. But for the most part, the Qs are easy to keep up on. If your job is to update your target price and your stock recommendation every quarter, then it's a lot more work. But if you're just a retail investor, 20 minutes, you should already know what you're looking for when the quarterly statement comes out. You should already know what you're looking for. Canadian real estate seems to be in recession. That's true. Transaction volume is only higher than 2020. With record level of population growth, feels like immigrants are living with more room density, a lot more density. You're right. Room density increases. How does that impact REITs and real estate? Well, I mean, the immigrants to Canada have always lived in more densely than domestic population does. They've always had a more dense population in their neighborhoods. So at some point, you can't fit any more people in a neighborhood. At some point, you've got to find more room, right? Are your strategies to identify momentum on, momentum off? Not really. Do you use any technical indicators? No. Almost like I don't even consider them. I don't even consider them as real. It would be like me saying, do I consult the Bible when I have a moral dilemma? No, no, right? So I look at technical analysis that way as just another religion. Drawing lines on charts to me is just a colossal waste of time. I don't know that really does anything. How are you managing your GT position? I think I've already answered that one. I think you said you worked 14 hours daily for years. Yep. Yeah. Did you ever question if all that work was worth it? Yeah, a couple of times. You know, I mean, is this really worth it? Like, I mean, I got no life. Yeah, I'm doing well, but no life. So, you know, it is a case where you get successful, but if you stop to enjoy your success, you lose the very success you created. So you end up creating this gilded prison for yourself that you're doing well, but it's a prison. You can't leave it. If you hope to continue to do well, you cannot leave it. And yeah, there are some times, especially, you know, weeks and weeks and weeks and months on end, you have no life. None of it is yours. It, after a while, it weighs on you, and it's just you wake up some days and it's like, I can't keep doing this. Like, how long do I do this before I say enough? Where is me in all of this? Because you get to a point where you don't even know who you are anymore, because there is no you left. There is no you. It's everything you do to, you know, this is on your list. This is on your list. You're doing everything for everyone else, and there's nothing for you. That even taking a night off is, you know, you feel yourself falling behind when you take a night off. It's like, I got to get this done. I got to get that done. It's like, you're getting emails. When's this ready? When's that going to be ready? We need this. We need that. We need this. It's like, God, throw it on the pile. And it was 4 or 5 years of that where you'd come up for a breath of air and you felt like somebody was just pushing your head back underwater. Yeah, it was a lot. It was a lot. I don't think I'd want to ever go through that again. 15 days for CFA. Could you wish me luck? Good luck. Just going over FSA right now and trying to memorize the ratios. Wow, shouldn't be watching this. A lot of podcasts time the markets perfectly and never have any losing trades. Yeah, isn't that amazing how they do that? And they tell you, I bought this at this price, sold it at that price, and wow, it's like, you guys just never lose. This is like, why are you even wasting your time telling us this? I mean, you never lose. No, I think if you're going to put yourself out there, you really should say up front what you're doing, and then you live and die by your record, right? I mean, hey, you can make anything up after the fact. I did this, I did that, I did this, I did that. Regarding TLT, given the recent rise in price the past month, how can one calculate how many rate cuts are being expected? Well, the only time you can calculate rate cuts that are being expected is with the Fed funds futures, because rate cuts happen at that end of the curve. The long end of the curve, these are yields. It's, you sort of just got to take the market's interpretation for it and say, well, how many rate cuts are being priced in? Fed fund futures over the next year, say 210 basis points. That's why the yields are where they are. You could agree with it or disagree with it. I tended to disagree with it last week, and it seemed like the right thing to do. But who knows? Maybe tomorrow I'll be proven wrong. I mean, I think selling the 102s made sense. They're not worth much right now, and if TLT pulls back tomorrow at all, in anticipation of CPI, I think TLT should get nervous in front of CPI. If it does, I'll probably close the 102 calls. Do you spend on peso on any bonds, equities? Are you holding cash and collecting interest right now? Just cash. I don't see it as the position is bigger than I wanted it to be, only because I saw it go to 20. So I took more. It's bigger than I wanted it to be. I haven't reduced it yet. I am covering my short US dollar position because of my long peso by shorting SPY, but I still have a net short on the US dollar, which I don't like. So I'm probably going to reduce my long peso position to something more reasonable if I see, well, where are we? 18, we're still 1880, I think, on the peso. I think if I see 1850, I might take some. Yeah, we're 1882. 1850, I might take some off just to bring my position back to a reasonable size. And then I would look for what's left over. Then I would look for something to put it in. If I thought that 17 or 1650 was in play, then I'd look for something to put it in. But I didn't put it in anything because the extra that I added, I thought I'm going a little too far on this one. So I will right size it. If I get 1850, I'll probably right size it. How would the slowdown for asset buildups for utilities show up in CapEx on an individual company's balance sheet? What do you recommend looking for? Slowdown for asset buildup, like once they start building up, where do you see the slowdown? Their guidance. Utility companies will guide on the build of their assets. They will tell you, at least NextEra does, they tell you how much they expect their assets to increase over like the next year or something. So they do tell you. Allocation, what sort of days to expiry are you looking at selling calls at? I don't know yet. I haven't really laid out a full plan on that one. I don't know. I'll figure it out this week, but I think it makes sense to do. But I just don't know yet. It depends on a number of things, right? Like premium, you can do 1 week. FCX has 1 week options, but if the premium sucks, it's almost not worth doing. So it's I'll figure it out this week. I have positions I would like to hedge. What have we got on time? We got time. Positions I would like to hedge. I've done well selling calls to generate some income, but interested to hedge with puts. What Greeks to look at when using puts to hedge a share position? Why do you want to hedge? That would be my first question is, why do you want to hedge? Is it that you want to hedge certain names because you're not confident in those names? Then just get out. Are you hedging pure market risk? In other words, are you hedging against individual names because you think the market's going to be weak? If that's the case, just do a macro hedge. Don't hedge each individual security, just do a macro hedge, buy a put on SPY or buy puts on SPY. Just do one macro hedge, and don't worry about each individual security. It'll be cheaper and faster. Let's see, where did we leave off? Working a very light load engineering job, so I have time to study for level 2. Received an offer to work as an investment analyst. Should I switch or focus on studying? Nothing is better than experience. Experience trumps everything. Experience is always the better way to go. Always the better way to go. Hands down, experience. Give me some pointers on structuring level 3 essay questions. I did a lot of that over the last couple of weeks. I did a lot of that in our live sessions on our site. So I'm pointered out. I mean, I did 12 times 36 hours of it in the last week and a half. I am done with the level 3 at this point. Writing cover calls in my US denominated TFSA for COPEX. Will I be subject to any USD or CAD taxation? No. In the TFSA, well, I'm assuming you're in Canada. So in an RSP, we have a tax treaty with the US, no withholding. The TFSA, I don't think qualifies for the tax treaty. So if you're long a stock and there is a dividend, I think there is a withholding. I think there is a withholding. Can you please give me some pointers on already did that. Questions about deferred revenues. Do you ever look at that as a measure of the strength of a business? Not really. It depends on the company. The order book for a company is important. If it's that kind of company where, it's selling a particular product where there has to be an order book. Deferred revenue usually is contract based. So it's I don't think it's an indicator of future business. So for example, we're going to be doing Costco in financial modeling. They have deferred revenue because they recognize memberships month by month. So you pay $120 for a membership, they'll recognize $10 a month as income. So at any given time, whatever their revenue is for memberships, we should see deferred revenue for 50% of that amount, because on average, half the people are done. Some have a month left, some have 2, some just signed up, but on average, it's 6 months. So that's non-refundable. It's not really a liability, and it's not necessarily an indicator of future business, because you bought a membership. It's contractual. It's just the amortization of your membership over time. Most deferred revenue was contractual. That's why you got it early. Whereas an order book, you order something, you might leave a deposit, but the bigger part of future business is the order book. The order book for some businesses is significant. Pay attention to that, but not so much deferred revenues. Favorite city to live in Canada if you had to stay? If I had to stay, I'd go back up north. I would go back to nature. I'd go back up north. When you're young, the north is more like a prison because it's too small and too constraining. But once you're done proving everything you got to prove, the idea of a smaller town is much more appealing to me. I would probably head back up north. Winters, being able to have a snowmobile and being able to actually use it. I mean, winters. Think of how great that would be. Winters with snow, with actual snow that you can use. Long summer nights. And if you've ever been way up north, the summer nights are long. I mean, the sun doesn't set till after 10. The summer nights are long. Sun is up at 5 in the morning, doesn't set till like 10:15. Water you can drink. It's just I'd probably head up north. I don't know that there'd be a city that I'd pick like Toronto, Vancouver, Montreal. No way. No freaking way. You would have to pay me to live in Toronto. I would never. You'd have to give me a free condo, and I'm talking a 3-bedroom condo, 2,000 square feet. You'd have to give it to me for free, and then you would have to pay me weekly to live there. That's how much I wouldn't want to live in Toronto. Now, if you gave me a free $2 million condo and you paid me $5,000 a week to live there, okay, we'll talk. We'll sit down and talk, because I know that even with that, there's no quality of life for someone like me in that city. There's no quality of life. So I probably would have to balance that out with saying, what you're giving me doesn't change my life. But you couldn't even pay me, I think, to live in those cities. Edmonton Oilers girl. I don't know what that means. Can you show how you trade Fed funds futures at IB? The ticker is QC. And if you think the Fed is going to cut rates, you buy QC. If you think too many rate cuts are priced in, you sell QC. That's all it is. The ticker is QC. What software app you're using to track your portfolio? Excel and IB. IB does a good job, and then I just use Excel. For the most part, IB gives me everything I need. It gives me everything I need. So, do you have everything in one place? Yep. Yeah. Wondering if you think a long call GM March position is too aggressive. With interest rates high, I don't like long dated calls. Do you think any upside could happen longer term? Could. So when I was running calls, the longer expiration on them. I don't know. You're betting in the right direction on GM, which is upwards, but does a March call, because you got to pay, you're buying it on the forward curve, right? You're not buying GM on a spot. You're buying on the forward curve. With high interest rates, that forward price is very high. So that's where you're buying the 50 delta call, and you're going to pay for it, which means how much does GM have to go up by March just for you to break even? Right? It may be a significant price. Is March enough time? I don't know. So I would seem to think that I would be more willing to sell like an October $48 put and keep rolling that $48 put over as it goes up, roll it to a 50, selling an in the money put rolled over time than paying for a call with high interest rates. I would rather sell the put, an in the money put to get a high delta. Would any of memory techniques such as memory palace or low or dominant method might help with that? I don't know. Give it a try. I don't know. I don't know. Try the trombone. Try the trombone. If CPI comes in hot like core is 3.5 instead of 3.2 expected, don't look at the year over year. Look at the month over month. TLT went down. Would you be selling 93, 92, 91? I would. Also, beta would likely go down, but what about Oxy, which is a commodity? You could make the case that it would go up, and you can make the case that, well, it's got beta exposure. It's when the market goes down, all good stuff goes down as well. The baby gets thrown out with the bathwater. That's why I love sell-off so much. That's why I love it when the market's just dropping 2-3% a day and carries on for a number of days, is because the good stuff goes down as well. So it's not just the overvalued stuff and the garbage that goes down. The good stuff goes down as well, and volatility goes up. I love that. The combination of those two things, I love that. Why do you think PayPal will stay this low? Well, what do you need PayPal for? PayPal's expensive. PayPal is two-sided, right? You transfer money, they charge me, they charge you. They hit both sides. there are just easier ways to transfer money, and there's going to be easier ways to transfer money going forward. But I just don't think the PayPal model is really a very good model anymore. I think it's kind of like PayPal is kind of like, your grandfather's money transfer system. There's just better ways to transfer money. What is your philosophy on government? I don't know if you got to be more specific than that. How would a company like structure even work? How would a company like structure even work? How do you find a CEO equivalent position who interviews them? I don't know that you have to have the government structured that way. But I think that you can have all the departments structured that way without there being some kind of wage cap. Like, what's wrong with paying the CEO of the Department of Education $18 million a year if they perform on a certain number of metrics and lower the cost of delivering education? Why, if they can take $300-400 million of costs out of the system, why not give them an $18 million bonus, right? Publicly, that's kind of hard to do, but we have no bonus for cost reduction. It seems like your pay is directly proportional to the size of your budget, so you're motivated to keep increasing the size of your budget. I don't know. I personally think at this point in time, democracy is significantly broken. I don't think democracy, as much as it sounds good, everybody gets a vote. I don't think democracy was intended for everyone to actually have a say. I don't think that really works. And what makes it worse today is the level of misinformation that most people have on both sides. The level of misinformation that they have. Because a lot of campaigning now is not me telling you what I can do. It's me telling you what they're going to do, and that's the last thing you want is that. So it's almost as if almost every political party now doesn't stand for anything. They sort of just stand against something. And I think liberals and Democrats, they're more like that. It's not, they're more about not so much what they're for, but what they're against. Not so much on the right. They do stand for some things, and I think they have the courage to say what they stand for. But it's social media. It's for-profit news. It's 24-hour news cycles that I think have destroyed the mind of the voter, such that we vote against who we're afraid of the most. We vote against the lies that our own party tells us about the other side. The Democrats lie about the Republicans as much as the Republicans lie about the Democrats. You have people like Jon Stewart and John Oliver that have funny shows, but a huge amount of misinformation that just make the people who watch it, which are mostly Democrats, go, yeah, this is a crazy group of people on the other side. And, democracy, I think, is broken. That I think maybe Trump has it right. Maybe what you need to fix things is a dictator for a while. Maybe he's got it right. And if you had to pick a left-leaning dictator or a right-leaning dictator, I'd probably pick a right-leaning dictator. You can think about Canada. Would you rather Trudeau be your dictator, or would you rather Poilievre be your dictator? If Trudeau were your dictator, my God, what a ruin this country would be, and I'm out, right? So to fix the debt, to fix the deficit, to fix the tax system, to reduce the size of government, you need a dictator. You need to remove the possibility of losing in 4 years. You have to have years ahead of you of being able to make tough decisions without ever risking losing your job. So maybe Trump does have the right idea in slowly trying to become a dictator, which, I mean, we all know he's itching to be a dictator, and maybe not a dictator in the sense of a dictator, but he's itching to be in control forever till he dies, forever. Maybe that's what you need. I don't see the debt being fixed in a democracy. I don't see the electorate making intelligent choices. When you say who interviews the CEO, that's the point of a campaign, is we interview the leader on who we want to vote for. But we don't do that anymore. We don't vote for qualified people. We vote for popular people, right? And it is just one big popularity contest. So it is just, a big movie of Mean Girls, of me telling you how bad the other side is and they telling you how bad I am. And this is where we are. This is where we are. Where'd I leave off now? Let me find it. Okay. What do we got here? Okay. We'll finish up soon. Do you plan to hold on your $4 put? Yeah, they don't expire till the end of August. I'm good with it so far. I don't know what I'm going to do with it. I don't feel any urgency at this point in time. There's plenty of time to roll if I want to roll. Canadians talking about America. Well, I can talk about America. I lived there for quite some time, so I am aware of what it is like. I'm aware of the culture. What's wrong with Canadians talking about Americans or talking about America? Do we not have eyes? Can we not see? Do we not have some perspective on which to look at things? Can we not look at the same data that you're looking at? Can we not see? I mean, you're in Canada. It's primarily American television. Can we not see Trump and Harris on TV all the time? Do we not hear all the commentary? I mean, I don't know that our minds are any different than an American mind, and other than not being able to vote. Canada is very Americanized to begin with. So when you say Canadians talking about America, here we go with the you're in that side, you're on that camp, and we're in this camp. We're so different. We're not different. We're North American. We're the same. I'm sure Americans talk about Canada, right? If put it this way, if you can't see some of the problems that your country has, maybe you've been screaming "We're number one" for far too long. USA, well, that doesn't work well in the rest of the world. The rest of the world can see that America is the world and global leader in mass shootings, the world leader in diabetes, the world leader in pre-diabetes, the world leader in anti-anxiety medication, the world leader in healthcare spending with some of the worst outcomes out there, the world leader in guns per capita, the world leader in incarceration as a percentage of the population. We can see that. I think we can have an opinion on that. So Canadians talking about America, maybe if you talked about those things yourselves, the rest of the world wouldn't be talking about it, right? So I don't know, with the eye roll of Canadians talking about America. This is what we see. Tell me I'm wrong. Tell me that America doesn't have the most guns per capita. Tell me it doesn't have the most shootings per capita. Tell me that the highest proportion of the population dies at the other end of a gun more than in a war zone. Tell me I'm wrong. So maybe I took that a little too personally, but this idea that you must be part of a group to be able to talk about a group, I think is a bunch of bullshit, right? I think that we can see certain things. It would be like me saying, the bicycle gangs, motor bicycle gangs, are as far as the drug trade and prostitution go, they dominate in that. And somebody from Hell's Angels listening and non-Hell's Angels talking about Hell's Angels, figure that. Well, I mean, we have eyes, we can see, right? So the idea that we can't talk about other groups because we're not part of that group, maybe that's what situates us uniquely to talk about that group, because we're not so close into it that we can at least see what's going on. We can at least have an opinion. Now you can listen to the opinion of other people and you can say, well, this is how people see us. Or you can just say, we're number one, USA, we're number. You can keep chanting that, but you're not number one. You're not anymore. You're number one in military, in your military prowess. You're number one there. You're number one for now in the terms of capital concentration, but that's going to other countries. Other countries are on the rise. So when you chant we're number one, what exactly are you number one about that you're so proud of? You pushed me on that one. I'm just so tired of that oh, you're a man, you can't talk about certain things. You're white, you can't talk about certain things. You're old, you can't talk about certain things. You're not working class, you can't talk about certain. Yes, I can. I can have an opinion on a bunch of things. I don't have to be part of your group to have an opinion on something, right? I should scroll down and see what, let's just scroll down and see what kind of pushback I'm getting on this. No pushback. Okay, well, I had a nice little rant there and no pushback, so I'll consider myself lucky. All right, let's start from the bottom, work my way up, and we'll end soon. But just to finish up on my point here, the next time somebody tells you that you're not allowed to talk about something because you're not part of a certain group, push back on that. That's simply not true. If that were true, we couldn't talk about shoplifters because we're not shoplifters, right? We couldn't talk about criminals because we're not criminals. We couldn't talk about almost anything that we're not part of. We're allowed to have opinions on things. You're allowed to have an opinion, and you may have a good opinion. Don't let anybody silence you simply because you're not part of a group, right? All right. Lithium companies have held back on investments and prices back down to 5-year. Could you expect to see a crunch if demand for EV hybrids continue, which they will? I think you're right on that with lithium is that I think we're underestimating the move to batteries. I think it's going to be more than just EVs. I think EVs are having problems right now, and that was the big driver of it. But if you are going to go to an electric grid that is going to be driven less by coal, natural gas, oil, you're going to have to find a way to store battery power. You're going to have to find a way. And a growing market right now, which I think is underestimated, is because utility rates are going to have to go up. They're going to have to go up. And you have different tiered pricing for rates. That the battery in the home, an 18 kilowatt battery on your wall, makes absolute sense because you charge your battery at night with low rates and you run your house during the day. That battery can pay for itself. I think we're underestimating that, the sheer power of that. That is a huge market going forward. Yeah, I think lithium, I guess if I had to think about the next 10 years, I'd say there'd probably be more demand for battery capacity than not. Right now, lithium is endlessly recyclable, which makes it a good material. There are other forms of battery. The threat to lithium right now is another technology. for battery storage that beats lithium. And I'm not scientific enough to know what that could be. Maybe somebody else has a better idea. I'm just not scientific enough. So, curious to know if you're finding it difficult to adjust to life in Costa Rica. I wouldn't say I'm finding it difficult to adjust to life in Costa Rica. I find it. There was a transition period where you had to figure out the culture because it was my experience was not good. Almost to a person, my experience was not good. But then you start meeting more people, and you say, "Well, maybe I just got involved with the wrong people. Maybe I landed in the wrong in a nest of wrong people." But there is a culture that you do have to adjust to. There is a culture of you have to approach it with a healthy dose of mistrust, more than you would here. In almost every interaction, a healthy dose of mistrust, which is just exhausting after a while. It's just exhausting, but I don't plan on being there long term. I think I'm going to make the switch from Costa Rica to Panama, to be honest with you. So maybe that gives you an answer of what I think. Do you think Argentina's experiment with Milei has a chance of success? As good a chance as any other thing. You can't keep doing the same thing again and again and again. And I think he's got that. Not only that, he is getting a lot more respect, I think, globally. That he is getting a lot more attention, in that he's not being written off as a nutcase, like during the election when he was running around with a chainsaw and saying crazy things. He's not getting that anymore. He's getting a lot more respect. So, if you had to either live in Germany, Japan, which one would you take? Good question. That's a good question. I'm probably going to side with Germany on this one. I'm probably going to side with Germany on this one. I can't speak the language in Germany. But I believe the prevalence of English in Germany is just as prevalent as it is in Japan. I think that it would be way too much of a culture shock for me to live in Japan. I think the expat community would be very small in Japan. I think probably Germany, if I had to pick the two. That's a good question. They both have positives and they both have negatives, but I think I would have to take Germany. Probably Germany, just on geography. Although Japan has good skiing as well. Germany has good skiing, but Germany has proximity to how many other countries, so I'd probably take Germany based on proximity. Yeah. Let me scroll up here. Purchase your level 4 bundle a couple of weeks ago and yet to get the chance to look into it as I sit for level 3. Well, there's no expiration on it, right? Just out of curiosity, can you share your setup? My setup. I'm not sure what setup there is. Do you think there's a risk that S&P will experience stagflation? Well, I don't know if we can say S&P will experience stagflation. Would the U.S. economy experience stagflation? with the S&P under pressure. I get what you're saying, like Nikki did for a while. Probably not. One thing that the U.S. Has, at least right now, that Japan doesn't, is a rejuvenation of the population. Japan really is for the Japanese, that they're not willing to embrace a level of immigration. The U.S. is 300-400 years old. Japan is a couple thousand years old, and it's that kind of history is hard. Culturally, it's hard to abandon. When you say, it's for the Japanese, that's not if the U.S. says, it's for Americans, or it's for these type of people, it would be seen in a negative light. But to say Japan is for the Japanese is not, you don't really get a lot of pushback, because it culturally truly is, always has been. So because they're unwilling to embrace a level of immigration, you have a older, aging, shrinking population. That's the big problem in Japan right now. If they had a higher level of immigration, they would have rejuvenation of the population. The U.S. does have immigration. I think they came off what, 2-3 years of some of the high, at least last 2 years, some of the highest levels of immigration, which Republicans seem to want to push back against. That would be where I would say that would be a problem, is if you have no way of rejuvenating the population. The birth rate in the U.S. isn't high enough to sustain an aging population. That's where you would have a problem. If you abandon any plans at bringing in what your population can't create. But then again, the Republicans also don't want any abortions at all going on in the country. And if you can outlaw that, you would suddenly have a much higher birth rate, right? And you're creating, well, it would take 18 years to create a working age adult, but you would have a much higher birth rate. But for S&P to do that, I don't think so. I think a lot of the S&P components, at least I think about half of them, have global presence. So I don't think so. I don't think I would bet on that. No. So the winners in the AI space will always be the semis. I wouldn't say that always be the semis. Early in the process, like let's take gold mining and like the gold rush. Early in the gold rush, the winners were people selling the raw materials that you needed to get to build the mines, the picks and shovels. But there were some big winners that hit it big. There were some really big winners that did better than the people selling picks and shovels, but there were a lot of losers. What was the last number that New York Times had printed for the number of venture-backed AI startups? Like 25,000 or something like that. Many of them will disappear altogether, and some of them will go on to be great companies. Software will be the leader at some point, just don't know when. Years from now, but software will be the leader in that space. But right now it's the build out, so it's hardware, much like the late 90s. What was winning? Fiber, anything related to the internet, anything related to computers, they were the winners. The hardware and the infrastructure were the winners. The websites and all of the sites that showed up, many of them disappeared altogether, but then you had the seeds of some big giants in there, right? You will have that with AI. I don't see why it would be any different. I think you'll have that in AI. right? Why can't I find full access and full access plus for the 2025 level 1? The rest of the levels have them. Go to markmeldrum.com, click on CFA. You'll get to a page. There'll be a little date there with a drop-down menu. Click the drop-down menu, click 2025, and then click level 1, and you should find it. Let me do it over here. Let's go to CFA. So click on CFA, go to markmeldrum.com, click on CFA at the very top, across the top menu. And it says select exam. You'll have pricing and subscriptions with an orange box in the middle. It says select exam. You click the arrow down. You may have to scroll down depending on what you're looking at. The menu may only go this far, but the menu is this long. So you may see 2024 level 1, level 2, level 3, ... There's a dashed line, and then you keep going down and you'll see 2025 level 1 packages. You click on that, and there you are. You get a whole page of them. And the self-study plus applied is the third one over, the third row over. Let's see. Which Greek do you consider most other than Vega? Theta. Vega is only when, if the market's really tanking, you look for high implied volatility. Vega is like, that's a volatility trade. You're looking for Vega with a decent enough delta that you're not going to get crushed. But for the most part, Theta is a good one. Well, when you're looking for out of the money options, if you're 30 to 45 days, I don't know that I really look at the Theta as much as I'm in the game for Theta, right? I'm gonna stay away from that question. Any comments on SoFi stock? I don't really follow SoFi. I understand they're not doing well. Their last earnings, I think, were good, just from what I pick up on Bloomberg, but I don't really follow it. How do you decide when bid-ask spreads are too wide to take an options position? I think about, well, what if I got to get out? Am I willing to cross this spread? If I really got to get out, am I willing to cross the spread? Once you get to 50-cent spread, 60-cent spread, no, it's too wide. 30 cents, it's not that exciting, but if you go in the middle, you can usually get picked up. But in a stress scenario, would I be able to get picked up, or am I in? Right? So I'd rather, even on, GM on Monday, when I was trying to sell puts when volatility was high, the spread was like $2. The market maker wasn't letting anybody in, right? If you wanted to get in on either side, you had to cross that big spread. I wasn't going to do that. No. I think that's it. I'm just trying to find questions that aren't, a repeat of some of the stuff that I've already answered. Wondering, when agency ever go bankrupt, even if all the investments are in agencies? No. Well, I mean, will it ever go bankrupt? You could have extremely bad mismanagement, sure. But they keep putting the numbers up in terms of net interest income in the dollar roll, and they keep paying their dividend, and I don't see stress in there at all. Started the applied series as a non-CFA. Okay, good. Why hire an external manager when most do not outperform the index? Diversification of strategy is the big thing. Only fund manager in Canada consistently outperforms his benchmark is Mark Schmell from Fidelity. Very few outperform the benchmark, yeah. Can you explain why U.S. Treasuries also sold up amid last week's equity sell-off? Is it money flying into U.S. Treasuries if the job numbers imply potential recession, market price? Explain why U.S. Treasuries also sold up amid last week's equity sell-off. Oh, you mean why yields went up? Why yields backed up? Well, because the week before, I think it was overdone. I think everyone recognized it was overdone. And as you had Fed speakers come out, they were saying, we're not on the same page as you. We're not going to do an intermediate cut, and we're not even talking about 50 basis points in September. So I think the market sort of said, oh, maybe we went a little too far here. I feel you would be a very good parent. I don't know that I would. Maybe. I don't know that I would. Why did you choose not to have a choice? Some things in life are not a choice. Some things are an outcome. It's not that I chose not to. It's just it never happened. And then you get to a point where it's, well, why would I now? I mean, why would I now? It would have to be one hell of a value proposition for me to do that at this point. Can still get those hats? No, I don't think you can. I think we still have something like 200 of them, but I don't know how we're going to get rid of them. Who has them now? I don't even know who has them now. I got a box of, I think, 22, which I'm bringing back down to Costa Rica because there are people in the CFA community down there, and I keep bumping into them, so I keep giving away hats. But I think somebody else has all the hats now. I don't own the hats anymore. I mean, I sold the company, so the M doesn't even belong to me. So, I mean, it's not my option to do it. But I am going to get the same hat done, but with the A on here for the applied level. I just don't know what it's going to look like yet, but, I'm thinking about it, and I'll figure something out. But I will reintroduce the hats because I kind of like the hat sales to support charities. Is it time to sell US and buy CAD? No, I don't know that I would. 137 and change with, I know Canada's probably going to cut 2 more times. The Fed probably going to cut in September, 1 or 2. I don't know. I don't know that I would buy it just yet. I'm waiting for 139. We almost had 139 in the sell-off, but there were too many other things I wanted to do. I said, I don't have time for that right now. I'll get to that later. And we're at 137 and change. Yeah, I think if we have a hot CPI report Wednesday, the US dollar will gain a lot of strength. Maybe that'll be time. I'm looking for 139 on the Canadian. I'm already long the Canadian, really, because of my Capri exposure. I'm already, in essence, long the Canadian. Why is applied learning better? I'm taking the test on February. I'd like to compare your two courses. So there is, in terms of thinking about how you would do things or the way you can approach the world. You can study the world, or you can practice in the world, right? So, academics, for example, you go into any business school, you have a bunch of academics studying the world. Most of them have never actually practiced in the real world, which I find shocking. To be a dentist, to teach in a dental school, you must be a dentist. To teach in a law school, you must be a lawyer. To teach in an engineering school, you must be an engineer, but you need never have set foot in a real business in your life to teach in a business school. To be a finance professor, there is no requirement that you ever have traded a single security in your life, yet you can be a finance professor. So these are people who study finance, but they don't practice finance. So imagine you had 2 rooms and there was a seminar going on in each room. In this room over here, you have a very well-published academic, in valuation. Let's say it's Damodaran, Aswath Damodaran, teaching a course in valuation in that room. And across the hall, you have Warren Buffett teaching a course in valuation. Which one are you going into? You got a very well-published academic and you have a very well-known practitioner. Which room are you going into? Right? I don't think it's much of a stretch to say that nobody's going in the other room. Everyone's lining up for the first room. The only reason you're going in the second room is because you can't get in the Buffett room. So you'll go in the other room. Now that's not knocking Damodaran. That's not knocking him at all. It's just that the real world always wins. Practical experience always wins. If I want to know about something, or if I want to figure out a strategy for something, an academic, it's not going to help me out. Give me a practitioner. Give me somebody who actually practices it in the real world, even if they only have an undergrad degree, or maybe not even an undergrad degree, but they've been doing it for 10 years. I'll take that over the academic any day. Any day, I'll take that over the academic. To act in the real world, I think, is far more powerful than to study it. Because by studying it, you never truly, really know it. You never truly know it. You only know what the theory says. And most of this stuff when you study finance, most of this stuff is theoretical. You can study duration till you're blue in the face, but no bond will respond the way duration tells you. Oh, it will respond in the right direction, but never by the magnitude that you said. The bond will never change in price the way the duration formula says it will. All we know is rates up, prices down, but you can't tell me how much, because you don't know exactly how that curve is going to change. So academics are aware that it's theoretical, but beyond that, it would be, they have their models and their theories and their publications, and most academics aren't really concerned. And I do mean this in the most straightforward sense. Most of them are not concerned whether they're publishing anything that's true or false. They don't really care if it's true or false. They only care that nobody refutes it, right? But they don't care if it's true or false. They don't really care if it's true or false. And they don't really care if anybody reads it. They don't even read it themselves after. They have no interest in what they do after. In the real world, you can't care whether something is true or false. You can't not care whether something is true or false. You're not trying to get published. You're not trying to make something good enough. You gotta be exact. You gotta be right, or you lose. Not so much in academics. So why is practical experience better? It always wins. It always wins. It always wins. Always. Experience always wins. Yeah, I think I answered that, right? Where was I here? Yeah, why is the applied learning better? It's always better. Yeah. We'll be selling hats again. No, not this year. No, not selling hats this year. No. In terms of financial modeling, how do you work with automotive company debt, since the majority of the debt is from financial arm of the company? Well, you have to you have to model that out. Most of the debt is from the financial arm of the company, from the leasing side of the company. So you attach it to the. I mean, you still have to forecast it out. It's still part of the company. You still have to forecast out what the interest payments are, and what the coupon payments are going to be. You still have to do the best that you possibly can with it. Recognizing, of course, that the assets that you have, the receivables that you have, really match up against the debt that you have. Now you can take it out and you could say, well, let me price this out separately, just so that you have a better idea of what the operations of the car company itself are, stripped out of the finance stuff. I mean, you can do that. You make decisions as you go along. There's no one right way to do it. It's a matter of, how can I say it? So financial modeling is about 10% Excel, really. I mean, if you're really, really good at Excel, but you know nothing about finance, you can't do this. If you're not that great at Excel, but you know a lot about finance, you can do this. So Excel is a powerful tool for what we want to do, but it's such a small part of what we do. We're going to use Excel because we don't want to do it on paper. You do it in Excel because there are relationships that you want to model, and Excel is a great tool for that. But this is not about making you great users of Excel. In fact, I would strongly recommend you go on YouTube and take a bunch of Excel courses on YouTube and get brushed up on Excel, because I don't plan on making this an Excel course. It's a course using Excel, and I'll show you how to link things and how to do quick shortcuts, like how to format a whole bunch of numbers very, very quickly with a couple of commands, as opposed to going in each cell. I'll show you how to do that stuff, but by no means am I going to make you Excel experts. That's not the point. It's 20% Excel. It's 80% assumptions. 80% of saying, okay, line item by line item. How am I going to forecast this? Is this a function of something else? So something like inventory, you can model that as you can figure out, well, my cost of goods sold is a certain number. I know my sales are a certain number. I know my inventory. I know my turns per year. So you can say, well, my inventory should grow in line with my sales, depending on what. Some things have relationships that way, that you say, I don't need to forecast inventory. I just need to determine the relationship inventory has with revenue. I'll be forecasting revenue, and in forecasting revenue, a bunch of things will figure themselves out. Like most of the working capital accounts will work themselves out that way, right? But it's the assumptions that you have for your margins. It's the assumptions you have for revenue growth. So for example, when we do Capri, because we're doing both Costco and Capri, Costco is going to be a little bit more difficult to forecast revenues, because we're going to have to think about things. We're going to have to think about the economy. But with Capri, we only think about, there's my fingers, we only think about three things with Capri. Its revenue is a function of only three drivers: is the average rent per unit, the number of units that you have, and your occupancy rate. So all we have to do is think about three things, right? How many units do we have? And we look at CapEx. Are we expected to grow in any kind of units? What's the company's plan on growing units? We'll make some assumptions on the number of units that will grow. We'll make some assumptions on the growth in the average rent. And that we can look at history to figure out, how has the average rent grown and why would we think it would change? And then we have to think about occupancy rate. Fairly straightforward for a REIT to get revenues. And a lot of the other stuff are relationships to revenue. So we find that that's rather straightforward to do. We do have some thinking to do about other things. There is significant debt that we have to think about, their CapEx and their CapEx schedule. There's always debt with REITs. But with Costco, it's a lot more assumptions that we have to make. they are moving away from the idea of when you first walk into Costco, you usually just show your card and in you go. And when you drive up to the pump to put gas in there, as long as you have the card, you put it in and you pump in gas. They want to move to scanning your card and photo ID so that only members can go in. It's kind of like Netflix cracking down on password sharing. Costco saying enough of this stuff that only members can come in the store now. You have to have a card, and you got to show ID for this. And when you bring your car up to the gas pump, it better be your car. You can't take your neighbor's car and say, "Oh, I'll go fill up with gas. I'm going to Costco anyways." It can't be your neighbor's car. They want to shut that down as well. So you make an assumption about, well, what's that going to do to memberships? It helped Netflix. Will it help Costco? So you got to make some adjustments. Well, if we get higher memberships, we know that revenue is a function of the average revenue per user. So if you can get users up, you can get revenue up. So not only do you have a growth rate in revenue, because you have a growth rate in revenue per user, but you have a growth rate in users that's higher than before. Somebody may think differently, right? Financial modeling is truly 80% goes into your assumptions, which means you better understand the company and you better understand the industry it's operating in. Those are the two prerequisites you need. Excel, it doesn't matter if you know Excel. I'll give you the commands that you need. There aren't that many. It's a lot of simple commands. It's you can get really complex with it. You can get really fancy with it. We're not gonna. If you want to, that's fine. It comes really down to your assumptions, and your assumptions really are, what is my best guess? So how many ways can we forecast revenue? There are a number of things that we can do. We'll try them out. We'll start from an easy financial projection, which is average growth rates, and forecast them out and see what we get for a price. Then we'll say, can we get better than that? Can we forecast this line item better? Can we forecast this? Do we have the information to say, well, we know what this is going to be for the next several years? Can we? And it's, once you're done with one of these, you really know a company. And when you do one, it helps you with all the others, because some of the relationships you model are pretty much the same across a whole bunch of companies. So companies that have inventory, we just have to figure out what their inventory turnover is on average per year. And we can figure out, if we think revenues are growing, we can automatically figure out how much inventories are growing. We don't have to figure it out every single company. We just have the same sort of technique each time. So, for modeling, to answer that question, how do you deal with the debt? It's, I may take one pathway. Another analyst may say, no, I'm going to look at it a different way. I'm going to model as a relationship of something else. That's fine. The car companies give us enough information that if we say leasing, that the level of debt is related to the level of leasing, and the level of leasing is related to the level of sales. It tells us on sales how much is leasing, like what is the uptake for the leasing, and what is the uptake for its own financing. It tells us that in the statement, so we can look over time and say, well, if we expect sales in units to grow this much, typically would expect leasing and financing to grow this much. And if we think that debt is always used to finance the receivables, which it is, it grows by a certain percentage. You can have a good guess out for a number of years of what the growth in that debt would be. So it is, from an uninformed perspective, it might seem, how can you even begin to forecast that? But once you start reading the 10K, and once you start reading, oh, this is related to this, and this is related to this. So if this number goes up by 2, this goes up by 1, this will go up by, debt will go up by 50,000 for each one of 2 of these. And it doesn't take long before you can map out a relationship and say, this is as good a guess as I'm going to get, right? Okay, we're going to finish up here because I still have 45 minutes on the treadmill to do before I'm done. All right. I think we're done. I think you mentioned you are single and plan to stay that way. If so, would you ever trade your success for a relationship? No. Well, first of all, I reject the trade part. Why would I have to trade it? If it came down to a trade, it's not a fair trade. I would never do it. If it came down to an addition, have everything that I have plus something. If the plus something were truly a plus something and not a plus something here, but a minus something here, I'm unwilling to trade off. It can't be a plus here and a minus here. It can't be that. If it's just a plus, yeah, I'm open to that kind of stuff. But I'm certainly not on a bunch of dating sites going out for dates looking for that thing to happen. I'm not looking for it. It pretty much has to just fall in my front yard, and I have to go out and say, "Are you all right?" And then fireworks and stars. Oh, look what happened here! You fell right. it just happened. It has to just happen at this point. Thoughts on moving to an undesirable location for a job you really like? Yeah, that's kind of one of those. What would you rather? Have everything you want, but lose this. I'd have to know more. I mean, okay, a job you really love. I guess my next question to that would be, why do you dislike the place? Why do you find the location undesirable? Is it because you have a preconceived notion of what the place would be, or is it because you have been to the place before, spent some time there, and dear God, you would never go back? Is that what you mean? Because you could be in an undesirable location and believe it to be undesirable for no other reason than the position you were in at the time wasn't that great. So that you may say, well, I hated my time there, but perhaps you were there during a period of your life where you weren't doing very great. That if you're in that undesirable location and you have a job that you love, maybe the location's not so undesirable anymore. So I guess my follow-up question to that would naturally be, why do you find it undesirable? And if it's because you've been there and you just can't imagine ever going back there, well, then you have to ask yourself some serious questions. Okay. Okay. I think I've covered most of these questions. All right, that's it. Good luck this week, and keep in mind Wednesday, right? Wednesday is going to be a big risk day, no matter how we see it. Wednesday is going to be a risk day, and we're really not doing much right now. And you can't really tell much. ES is up right now. We're up to 2.75 on ES. Forex, the yen is still weaker. The peso slightly stronger. Yeah, but not much to talk about. And Bitcoin is, down 2%, but give it 10 minutes, could be up 3%. Give it another 10 minutes, could be down 4%. A currency, right? So, okay. I'm gonna log off and do my 45 minutes on the treadmill now. Ciao. Where's my button? Oh, there it is.